currently it's already on a very high level, and it is also expected that in future this demand will be ongoing, and the company will be benefiting from this. And even if you see there is a good rise in the revenue of the company, even profits are very good and in line and sustained over here. And if we see the installed capacity has been increasing simultaneously. If you see from the past, right from the 2021 till 2025, if you see the capacity installed by the company has also been increasing, and the kind of demand that they are catering, I find in the long term it's going to be definitely a good potential buy and value addition from here.
Okay, all right. So that's the view on NTPC Green. The next one is from Sijo, who's writing us from Qatar, asking about Sagility India. Wants to know if this is a good counter to continue to hold, or maybe add more at the current price levels from a 3 to 5 year horizon. Kushi, your view on this one?
So if we talk about Sagility India, currently talking about Sagility, there might be a little jitters in the near term, as due to the ongoing IT concerns and the concerns which have been created right now by the AI bubble fears. So due to the AI trouble what's making right now in the IT sector, I find near term might be halted a little bit in the near quarter. This quarter might be impacted, and due to the high volatility what the company is facing due to the IT and the AI fevers what's currently going on. But talking about the long term, the type of clients they have, the type of projects what the company is catering into, and the type of developments what company is currently going through, they have been increasing their AI capabilities in a high ratio, if you see, and their growth trajectory from the past has also been high. Near term might be impacted a little, so I guess we should be wait and cautious. We should have a wait and cautious stance in the near term, but for long term, definitely it's a good buy.
Got that view, Khushi. So that's coming on Sagility India. Has done well for investors, but coming back to the very important level of 31 in terms of its IPO price as well. So underperformer from the highs. The next question that's coming in is on Parity Phosphates. Our viewer wants to know if it's a good time to enter this counter. Gaurav, would you recommend that?
Hi, can you just repeat the name of the company?
Yeah, it's Parity Phosphates.
Okay. So some bit of underperformance is seen from the entire chemical space as such. They have not done to the mark that was expected, and so is this company also. The only good thing that I can see is that the stock is witnessing some kind of bounce back from its earlier support mark and the psychological supports of 100 odd levels. I still am not comfortable at these levels. The chart formations are not at all attractive. Overall performance of the company is also a little bit on the decimal side only. The December quarter was not at all good. I think it is better to wait for the March quarter numbers and see whether some kind of an uptick or a reversal comes in or not. And if the stock falls below 100, it's better to take a stop at 95 now.
Okay, the next one is also for you, Gaurav, and Giri from Hyderabad is asking about Zaggle. He says that he's bought it at an average price of 247. Wants to know if a 10% upside in the medium term is possible on this one or not. He's already sitting on a loss of around 1.5, almost 1.5 lakh rupees. What would you suggest on the charts?
Had it been a different market scenario, this question would have been a lot easier for me to answer. But in the current market scenario, a 10% uptick from current levels seems little difficult. But yes, there will be a possibility if the stock manages to go past 235 odd levels. Until then, he should hold on to his position, taking a stop at 205.
Well, viewers, you can also call us for stock-related queries. Then the landline number is flashing on the top of the screen as we speak. But next question coming in on HDFC Life. Our viewer, Eli Raja, actually holds shares at 750 rupees per share. So stocks down from that level. He's asking if he should, what he can do at this point of time for the next 2 to 3 months is what his question is. What would you recommend, Gaurav? 750 seems a little far off now, but is it a good time to average at this point?
Absolutely. This is the correct time to average. The stock has witnessed reasonable profit taking from the levels where our view has bought it. 750 currently comes out to be the confluence zone of the short, medium, and long term averages. So when the reversal comes in, that will be acting as a resistance point and the immediate target. Yes, he should. If he is left up with some kind of spare cash, this is the time to average out his position. Wait for another 1 or 2 quarters, the stock could certainly revive.
Got it. The next one is from Manohar, who's writing us from Puducherry and asking about realty as a space. Which are the two stocks that he can consider buying at this moment from a long-term perspective? Kushi, your view?
So talking about the realty space for now, I would not suggest to go for buying for any of the stocks as of now, because the current scenario, what is going on, so there is a lot of possibility that we might face higher inflation pressure to our economy due to the higher crude oil prices what's coming out right now, and due to the higher crude oil prices, RBI or monetary policy what we're expecting right now, we won't get any rate cuts as of now in near term. So due to that, there's a high chance of possibility that the inventory might pile up for the inventory of the real estate builders and developers, due to which the high of the inventory pile up stock, profitability and margins might impact in the near term. So for now, it will be a wait and watch stance for the reality space as of now. Till then, we don't find any relief measures or any ceasefire news ongoing in the Middle East wars which are ongoing right now. And till the time we don't find any settlement in the price of the crude oil, because as of we are seeing a spike and surge in the crude oil prices, the inflation concerns are been coming higher side to the Indian economy right now. So for now, the stance would be to wait and watch for the reality space.
Right, very, very interesting, in terms of what we're seeing, as even if a domestic play could get impacted because of the war. Got a view, Khushi, but the next one's coming in on Swiggy. Our viewer holds shares at 396. This is Divya from Abu Dhabi, and she's holding 150 shares, Gaurav, and she is directing this question to you, asking what if she should wait now, or is it a good time to average this counter? What would you recommend?
So in Swiggy, if we'll see, so the view would be to hold right now, and adding would be not be suggested at the current levels, because as we are seeing a higher side pressure coming on to the Nifty and overall broader markets, we are seeing continuously there's a pressure going on in the broader markets. And if we see the current, due to the higher spike of the crude oil prices, the gas prices are also been going up, and there's a very much concerns around the LPG gas concerns also, due to which the restaurant business might be impacted in the near term, and due to the lower order value or due to lower turnover of the transactions, this quarter might be somewhere not up to the mark, and we might face lower margins. We might get not as per the expected growth in the revenue for this quarter for the Swiggy or eternal counters like this. So for long term, but obviously the view is for long term, we may average and we may go for the long term, but in near term, I find we should maintain a cautious stance.
Got it. Gaurav, a very quick 30-second view, if I can, on the charts. Do you have a similar view to Khushi as well, that it's a good time to average?
Yes. The viewer can consider averaging the position. A bounce is likely towards 320, 340 odd levels in the immediate near term.
Got it. Well, thanks so much for that, Gaurav, as well as Khushi for that. So Swiggy, Eternal, both stocks that continue to be on our radar, given the number of queries that we've been getting on either counters as well. But go across to our next caller from Andhra Pradesh. Akash has a stock query for us. Akash, good afternoon. Welcome to the show. What's your query?
Good afternoon. I'm planning to buy Tata Motors commercial vehicle. Is it good time to buy at this price, or can I wait it till it falls?
And Akash, would this be a long-term buy that you can continue holding, or would this be a short-term one?
No, it's a long-term one. And also I have another query about HDFC.
Okay, but sorry, Akash, I'll have to cut you. Let me just take one query at a time because we have a lot of ones that we need to cater to. But Khushi, Tata Motors CV, he wants to buy for the long term. Would you give a buy call at this price?
So Tata Motors commercial vehicles is definitely buy call right now. So there's a good potential coming up in the stock. And if we see the demand of their new product launches, there are many product launches lined up for the coming times and coming ahead of this year. So if you see year 26 and 27 is may be a very strong for them due to the launches what they have planned, and already we see the demand of the products what's already there in the portfolio. Even they are getting a very good demand, and further down if we'll see their profitability has also been increasing continuously. The post the merger demerger also we'll see their response and their profitability sustainability is very good. So for long term, it's definitely a good buy.
Okay, so that's the view on Tata Motors. The next one that we have is from Raj, who's writing us from Bengaluru, asking about IOCL. He wants to know if this is the right time to enter the stock from a slightly long-term perspective. Gaurav, do you think the charts are attractive enough to enter right now?
Yes. This decline should be utilized at a good buying opportunity. Given the fact the stock has corrected, the opportunity as well. Plus, it is a high dividend paying stock as well. Therefore, on the both fronts, the viewer will be benefited.
Got it. It's time now for the rapid fire round in this edition of Fast Profit. Gaurav as well as Khushi request you to keep your answers only on buy, sell or hold, so we can take as many in the next 3 minutes. First question is on JSW Cement. This one's coming in from Deb from Bangalore, and she's bought shares at 147. Gaurav, is it a good time to average now?
Just hold. Take a stop at 110. Do not average.
Okay, NCC is the next one. Our viewer wants to know if this is a good hold from a long-term perspective. Khushi?
So NCC is a very good buy potential right now. The stock is trading at a very good book value. We'll see it's trading at 1218. It's a very good buy right now.
Laurus Labs bought at 908, almost 200 shares. Khushi, should he continue to hold?
Yes, you should continue to hold.
Elecon Engineering is the next one. Is this a good hold from a 6 months perspective? Gaurav, your view?
Yes, hold. Can average as well.
Ambar Enterprises bought at 7,400. Gaurav, is it a good time to average this counter now?
Absolutely. The season is approaching. Average it out.
Godfrey Phillips has seen a decent correction. What are the technical charts indicating right now, Gaurav?
Technicals are indicating some bit of revival here. Can consider averaging this stock.
Tata Motors PV, Khushi, is it a good time to continue holding this stock or switch to TVS?
No, we can continue to hold.
Canara Bank from a long-term perspective, is this a good hold? KSR wants to know your view, Khushi?
Yeah, it's a definitely hold from here.
PM Industries bought at 2250. Khushi, should our viewer Ganesh continue to hold his 100 shares?
PM Industries is also a hold right now as of the current valuation what the stock is trading upon.
Advait Energy. Gaurav, any view on this one where charts are concerned?
Just a second. Yes, he can hold the position at above 1650.
Fino Payments actually is the next one from Sai Reddy. His stocks have been on a havoc run in that sense, Gaurav. He has 400 shares. Would you recommend averaging it now?
Better to reduce.
Bank of Maharashtra. Do you think I should hold, exit? SK Mathur wants to know. He's holding 500 shares at the levels of 71. Gaurav, your view?
Average. Stock is good, will perform.
Ultratech Cement, Khushi, should our viewer Jay Krishnan continue to hold?
Yeah, it's a hold right now. I can also average for long term.
Bandhan Bank, do you think this is a good hold for the next 3 years? Biswajit from Kolkata wants to know, Khushi?
Yeah, I think this is a good hold right now.
Is it a good time to invest in PG Electroplast, Khushi, at this point of time?
Talking of PG Electroplast, also yes, it's a very good opportunity to buy over here.
Okay, Indian Bank, at the current price, is it a good buy? Rani wants to know from a short-term perspective. Gaurav?
Certainly a good buy. Do not miss.
Archana wants to know if PNB also is on your radar, Gaurav?
Absolutely. PSU top 5 to 6 PSU banks are good.
Okay, ONGC, is it worth buying at the current levels, Gaurav?
Yes, can consider. GRMs will improve.
The seafood space, Avanti Feeds amongst others, Khushi, is it a good time to buy now given the run-up's already done?
Should we trade these stocks a bit of cautiously?
KPIT Tech, should I buy it in staggered manners or the viewer Manish already holds 31 shares? Gaurav, your view?
The mid-cap IT says Coforce, Persistent and Emphasis are the best bets.
Pramod has a question, Gaurav, on NDC Steel. He already has shares at 39. Should he average now at 36?
NMDC Steel, right?
Yeah, that's right.
It's better to switch the position to some other stock, something like National Aluminium or Hindalco in the middle space.
Okay, Dr. Reddy's hold or sell from a long-term perspective. Sundar from Kochi wants to know. Kochi, your view?
Dr. Reddy is a hold.
Lhasa and Tubro, is it a good time to buy, Gaurav? Is the correction largely done?
Absolutely, it's a do not miss from the large cap space. Average it out or add.
Got it. Well, Gaurav as well as Khushi, thanks so much for joining in. That's all the time we have on the rapid fire as well as this edition of Ask Profit as well. But Mahima, we have hit the century yet again. I can see the smile on your face with 106 queries this time.
So it's a good combination for us to keep wearing the green and red comments.
So we'll probably switch out the colors for tomorrow. But 106 queries, viewers, today. Thanks so much for joining in, helping us solve all these queries as well as to our guests. Stay tuned. 20 Profit India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
afternoon. You're watching India Market Close, and markets have, I would say, behaved themselves very well. To put it at the least. At one point, Alex, it seemed like all of the morning gains were pretty much given up, but a rebound and a strong one, 23,600, and then back, about 0.5% up right now in the Nifty.
It's like a roller coaster at this point. It's twists and hairpin turns, all of that happening, everything happening, but it's a pretty picture as things stand right now.
Yeah, absolutely. Here are some of the things that's been playing out through the day. The Nifty has changed direction around 7 to 8 times during the day. Just the Nifty. You know, we should actually pull up the Nifty intraday chart, because you'll be able to see that kind of move. 23,550 to 23,600 has acted as an intraday resistance. Look at that. Just go back to that chart for 1 second if we can. And it's just astonishing the kind of jagged edges you've seen off its highs right now. But this has truly been a volatile day. Nifty, metal and auto have continued their upward trend. Metal and auto have gained for a second consecutive session. IT, Nifty IT continues to fall, down for a 6th consecutive session, and the IT index is now down 4.4% in the last 6 sessions. Bank Nifty has gained, led by large private banks. Cash market volumes are down more than 10% compared to previous days, at least till 2 p.m. So, Alex, you're seeing some kind of a move coming in, but maybe on lower volumes till 2 p.m. Some fresh blood and fresh money seems to have come in at 2.
We've seen this play out actually a few times. The only issue is, Tamanna, you're seeing from 24,600 levels, and that's
23,600.
23,000. Thank you for reminding me. 23,600 levels.
Very far from 24,600.
I wish it was 24,600. 23,600. Those are the levels that you're seeing it cool off from. In fact, let's pull up the heat map for the Nifty 50 and look at what is moving, because there are a few counters and large cap counters at that have moved up from the low point of the day. And you have, for example, a Larsen & Toubro right there. It's up about 1%. Remember, it was trading in the red not too long back. And in the top line, you have Mahindra & Mahindra, Tamanna, once again that makes it to the top. Gains of over 3% in trade yesterday, a further 3% in trade today. So some of those auto counters are bouncing back. Eternal
is a story of the day.
Is a story of the day, isn't it? It gained yesterday as well. It was the 4th or the 5th biggest gainer on the Nifty 50, but today it's up as much as 6%. A few other automakers as well in the top line, right? So Tata Motors PV, Maruti Suzuki, Eicher Motors up and about, and this entire pack has been beaten down. And how perhaps some of the initial trends that we're hearing about pricing changes, about certain other demand trends, might be what is affecting these, and the fact that they've been beaten down so much.
Yeah, you know, I want to pull up the India VIX, because seriously, the important aspect here simply is that the trend that we saw 24 hours ago, starting in closing trade yesterday, is it continuing? Was it just a technical bounce back, etc.? The fact that you have a 7.5% cut in the fear gauge, you're under 20 after a while, is, I think, important and noteworthy. We should pull up the Brent as well, but the VIX at the low point of the day, it's showing you that some fears have calmed. Brent is still at 103.4, and here's the tricky bit, right? It's not like crude has cooled off. WTI crude has cooled off a bit, but Brent has not cooled off. Even so, you are seeing maybe the market easing off a bit. Now, it could be one of two things, Alex. Either it is now smart money that is looking for value hunting, coming and seeing that was yesterday's story, seems to be continuing. That's when Eternal, M&M, etc., the usual favorites are doing well. Or it could be a sense that the worst may be over and there will be a retreat one way or the other. I'm not sure which it is.
I'm not sure either, but you know, even in the broader markets, we briefly spoke about that, but we should pull up the mid-cap index and the small-cap index just to drive home that point. We're at very close to the high point of the day for the mid-cap index, about 0.8% higher, about 0.5% for the small-cap index, and pull up the advanced decline ratio, because this is where the story is. You've seen quite a bit of changes in this.
But advances have been over declines through the day.
Through the day. But there was a significant narrowing of the gap towards that point where we were in negative territory for the benchmark Nifty 50. The broader markets in any case were doing a little bit better than the benchmark. That continues to remain the case.
Yeah. Sectoral heat map. Let's pull up the sectoral heat map and as well, just give you a sense of what's moving there. Metals and IT is a study in contrast. So the Nifty IT is one way of putting it, Alex, is Nvidia's gain overnight is IT's pain. They have now become linked in a sense, and comments from Nvidia about how positive their outlook is, their new semiconductors, their new chips which they have actually positioned, again making people worry about IT. IT is like one of those nagging pains that people worry in the middle when everything's okay. They're like, oh yeah, we're worried about IT, and then you see that playing out. But look at it, so much green on the screen: metals, auto, defense, realty, all of it moving up. I'm actually going to get Ajit Mishra in. Ajit Mishra, SVP Research at Religare Broking, joining in. Ajit, very good afternoon to you. Where are you seeing the Nifty going? 23,600 has been tested. Where is the resistance coming in?
Yeah, good afternoon, Tamanna. So, Tamanna, we are seeing the expiry move playing out, plus the mean reversion, basically, the kind of decline that market has experienced in the recent weeks. So even the 20 EMA is around 24,400 mark. So we are just seeing a catch-up move after this sharp sell-off. And at the same time, bit of a stability on the global front is also helping the markets. But today, being the expiry day, we feel that 23,600, where the call writers are still active, might continue to act as a resistance. So that might cap the upside for the day. But eventually, the way we are seeing banking and the other rate sensitive like auto witnessing decent traction, this recovery might extend to 23,800, 24,000, provided that crude stays where it is. So broadly, it's a recovery play that we are seeing in the market. One should not get carried away, but selective positioning, especially in the sectors which are showing relatively higher strength, is something that one can definitely have.
Got it. Individual stocks though, Ajit, and good afternoon to you. What's looking attractive at this point? A lot of people are going bargain hunting amongst the blue chip names, right? Are you one of those?
So certainly, Alex, because the kind of volatile swings that we were seeing in mid cap and small cap, especially during the recent decline, the prudent approach is to stick with the large cap, because it's easy for us to hedge those positions also, especially when the market goes volatile. But having said that, we still have some of the mid cap and large cap names, and select small cap too, where one can look for fresh trading position. So PFC is one such name from the power distribution and power financial if not inch higher. So Sun Pharma, after this recent dip, has formed a fresh buying pivot around the 20 EMA mark, and with stop at 1760, one can go long even at current levels with 1880 to 1900 as the position targets.
Okay, all right. On to our stock of the day, and I must confess that this is a stock that earlier on in the day when we discussed what to take as a stock of the day was gaining more. It has cooled off just a tad bit. It's still up about 4%. I'm talking about Scient DLM. It's not had the best time of it. In fact, if you pull up the 1-year chart, you will see what I'm talking about. It is down over 40% from its 52-week high, and it's just now making a bit of a comeback. And the reason for that potentially is a JP Morgan note. JP Morgan has turned bullish on this counter, and it's expecting the company to pick things up again. Puneet is joining in to tell you about why the stock is down in the dumps as things stand right now, and why JP Morgan is saying that that might be about to change. Puneet?
Well, thank you for that. Most certainly the latest trigger is the JP Morgan note upgraded to a overweight rating, target price of 400 rupees per share on Scient DLM by JP Morgan. They've highlighted that, currently the cheapest stock in the EMS space. Now, for the last 3 years, stock has given negative returns of 33%. And as you rightly highlighted, the last 1 year has also been under pressure. But given the valuations of the other peers as well, makes it a very interesting play. Now, JP Morgan is making 3 key points. One's, of course, larger on the EMS space, where they feel that the investors questioning whether this sector or this story is over is a narrative that they are rejecting thoroughly at this point of time. They forecast almost 22% revenue CAGR for Scient DLM between FY26 and 28. But it's important to understand what's happened in the last 3 quarters, because they have been facing delays in order inflow and the conversion of those orders to revenues as well. So hence you've seen a consistent decline there. The other aspect is due to the uncertainty of the India-US trade deal, because 87% of the company's revenue is from the export market. Hence, these trade deals now give some solace to the company. And also the fact that Q3 revenue was down 32%. Let's also quickly look at the consolidated revenue trend over the last 4 quarters. will show you that while quarter 4 was up 18%, look at the consistent decline over the last 3 quarters for a EMS company nonetheless. The order book also has a similar story where quarter 4 was the lowest point, quarter 4 FY24, and then has seen an increase as well. But finally, what do you have to watch as investors? Now, stocks down 16% before today's move in the last 1 month and at 22 times, much cheaper than the other peers who are trading at 40 times around from FY27 perspective. And finally, in terms of the guidance as well, expected to be strong by the management in quarter 4. Motilal Oswal also feels that this could be the last quarter of decline, which was the previous one. So multiple things to watch, but a key stock in the EMS space to have on your radar.
Okay, very interesting, right? So Ajit, very quickly, I'll come to you on the technical check, and then we'll try and get a fundamental view as well. 313, is this a buy level for you?
So Alex, as you've rightly mentioned, that the stock was reeling under tremendous pressure of late. In fact, we saw new, record lows also in this stock. Today, definitely, it made an attempt of a recovery to reclaim its short-term moving average, but it lacks, sustainability at the higher end. So, in my recommendation, one should wait for let this stock to stabilize above 320 mark for any fresh position, with the 300 then as a stop loss and 360-65 as a positional targets.
Okay, the other stock that's really in focus is Eternal. We told you it could just be the story of the day, and one of the reasons is this JM Financial take on it. They have maintained a buy and a target of 400 rupees on Eternal. Now, mind you, this is a stock which has seen some really rough weather. And especially after Dipinder Goyal said he's moving away from actively running the business, Albinder Dhinsa has come in. And here's what JM Financial says. They say Blinkit's business shall emerge stronger once macro normalizes. Supply side disruptions are linked to gas availability issues. They might be overstated. They maintain NOV growth, NOV's net order value. They maintain that growth forecast of nearly 18% year on year in the fourth quarter of FY26. That's an estimate they're making. The impact of new competition in food delivery is overstated. Investors with a 12 to 18 month horizon should aggressively accumulate, is what JM Financial is saying. They say it's attractively priced at 35 times March 28 estimate earnings. So maybe that's one of the reasons you have some block deals as well, why you're seeing a 6% jump up in an Eternal today. Ajit, do you like Eternal at these levels, and what are the charts showing you?
Tamanna, after this correction means from 360 to 220, the same zone from where last time we saw the base formation followed by a recovery or rebound, which also coincides with the major averages on the weekly chart. So yes, possible rebound attempt is definitely on the cards. 242 is the first area of hurdle for Eternal, where 20 EMA is placed, and in case if it manages to cross, then probably around 255, 270 also something the stock might test. So as of now, yes, you can look for fresh long position with 225 as a stop loss, and once it crosses 242, you can wait for a target of around 255, 270 positionally.
Okay. Ashish Chatmota also joining in this afternoon. He's Managing Director and Fund Manager at Apex PMS JM Financial. Ashish, great to have you on the show as always. Thank you for your time to us. Let's start by talking about what we're seeing right now. Is this just a technical reversal? Is this, valuations finally looking attractive and then we're not bothering too much about what's happening in the Middle East war right now? Or is there a sense that the worst is over?
Hi, good afternoon. Thanks for calling me on this show. First of all, in terms of valuation, definitely valuations have become a little attractive. If you look at from a Nifty 50, on a 1 year forward basis, we are trading around 17 to 18 times, much lesser than the 2021 averages we used to trade. And typically we have seen somewhere around 16 to 17 times is where market starts looking very attractive. And I think in the past also, except some of the extreme downside like COVID or 2008 crisis, generally a fall towards 15 PE multiple is where we say that markets have become very, very attractive. So from that perspective, around 22,000 zone it was an area where a lot of people were looking to add more positions. So since we saw correction below 23,000 in yesterday's trading session, and that's how I think it has entered into a value zone. Now whether this is just a reversal or or it's a complete reversal or a dead cat bounce. I think we need to understand that there was extreme F&O selling pressure which got created, and FI short positions were also at a very very high zone, and that's where some short covering is happening. So yes, I think this rally might extend towards 23,800, 23,900 kind of trajectory, but still we are not out of woods. So my understanding is next 1 to 2 months is going to be little volatile. The broader range which we are looking on downside is 22,000 on the lower end and 24,500 on upper end. Till the time we don't see a breach on either side, this is going to trade in this broad range. Since Q4 earning numbers are also going to be little, analysts are not sure because of this huge, commodity supply shock which has happened. So my sense is they will wait for the clarity, and that's how the future, projected EPS number will come, and that's how the market will start revisiting about its, from a valuation perspective. So my sense is it's going to remain range bound, but definitely stock and sector specific opportunities looks interesting.
Specific. On that note, let me talk about IT, because it has bounced from the low point of the day, and take a look at that. Around 935 or thereabouts was the low point, about 1.8% off the low point of the day and climbing even so, but it remains the worst performer in trade today, and one of the only pockets of red at this juncture at least in the market. Let's talk about why it is seeing selling, and one of those triggers, Puneet is joining in to tell you about that. One of those triggers, Puneet, is that announcement overnight by Nvidia, isn't it?
Well, most certainly it is getting a little difficult to start linking IT as a domestic player and with the global factors, but that seems to be the trajectory. While you rightly said down 200 points today, a recovery of almost 600 points from the day's low shows you the strength that this index has seen today as well. From today's low, 28,288 has touched the day's high, which was at the start of the trading session. So seen almost 800 points of recovery from that zone. But the latest news today has been that Jensen Huang of Nvidia has announced that he's raised the demand outlook. And of course, these are the stocks that have hit a 52-week low, Coforge as well as Wipro. But latest announcement being that they've raised the demand outlook for AI products from roughly around 500 billion earlier to $1 trillion just for 2027. Shows you the strength of what their products they see in the market currently. Of course, there have been other key announcements made as well. The other one, we've been speaking about in terms of the robotaxi achievements as well. They've already partnered with a few more players like BYD, Hyundai, Nissan and Geely as well for the Newton product. They've also highlighted specifically that the demand outlook is the other key factor that we're watching out for, because they seem that this could be a ChatGPT moment in the robotaxi space and AI players could be a big beneficiary. But it is important to highlight that the demand transition for this new announcement directly with the Indian IT players is yet to be ascertained as well. Very quickly before we wrap, because Kotak had a couple of key interesting points that they had highlighted in their note a couple of days ago. They feel that these headlines are beginning to shape the behavior of CIOs at this point of time beyond stock prices as well, and highlighted that procurement teams appear to be slowing down the decision making process. So it's not a runaway jumping to the AI bandwagon at this point of time is what Kotak's view is, but a lot more to watch out for from our next conversation.
And Sandeep Agarwal, fund manager at Sovilo Investment Managers, joining in for more on that. Sandeep, very good afternoon to you. It's not even blow hot, blow cold for Indian IT. It's largely been dismal even through this this uncertainty of the war period, isn't it? Though on the face of it, there's no real reason immediately for IT stocks to suffer.
Hey, hi, good afternoon, and thanks for having me on the show. Yes, I think, now what is happening is that every news on AI is being taken as being negative for Indian IT. So I think in last 2-3 weeks, the correction has been overdone in my view, and I believe that this industry is at least for large cap a 5-6% revenue growth and 3-4% benefit of margins and EPS and buybacks and also currency at the EPS level. So 9-10% growth, and now these stocks are like 13 to 15 times. So very, very comfortable range, the large cap tech names and also the IT services, the small cap names. There is still a lot of froth in the ER&D space, where I think there has to be a huge correction from here also to justify the valuation. Otherwise, I think 80% of the IT index is now little below the fair value. That is the way I would put.
How do you rank that though? And Sandeep, if you were to order this in terms of priority, and it's just the valuation game that seemingly has changed, right? Because if we were talking about a month and a half back, your statement was that you don't like any of these, and we've had conversations about terminal value, we've had conversations about PEG ratios. Things have changed right now. How do you rank them in terms of fundamentals and valuations as things stand right now?
So you're absolutely right. Even 1 month back, 1.5 months back, they were expensive. But if you see the way they have fallen in last 40-45 days, around 18% average fall is there. And before that, they have fallen from peak around 30%. So now, 48-50% it is fallen from the peak. So our view 14-15 months back was that at index level, it has to fall 40%, and the ER&D companies has to fall 70%. And some of the expensive mid caps has to fall 60-65%, and the large cap has to fall 40-50%. So I think everything has been achieved except the ER&D, which has fallen 35-40%. So another minimum 25-30% is where I believe there is more fall to happen. But yes, now the PEG ratio, as I explained, now they look more reasonable. If you see from revenue growth perspective, also if you see in INR, the PEG ratio for large caps have come to 1.4, 1.5 times. For the good quality mid caps, it has come to 1.8 times. And for the small cap, it has come to 1.2, 1.3 times. Barring the ER&D, where still the PEG ratios are 3 times, 3.5 times, which is very expensive in my view. So the fall has been sharp and it has been quick. So I think, broadly, we are now in a comfortable zone. I see that, as I have told again and again in last few months, that I don't think that this industry will see a revenue decline at all, because we are very, very core to any of this implementation. Also, I don't see margins will fall because, last 2 years, none of these companies have built manpower. And so there is no additional strength in the bench, which will cause their margin dilution. So I think now we are in a position where valuations have come down meaningfully. The PEG ratios are justified, and revenue growth will be 5-6%, and PAT growth, EPS growth may be 9-10%. So
buying then, Sandeep, what are you buying? What frontline, mid cap, the ones which got hit the most, the favorites? If you don't want to take names, that's fine. But just give us a sense that it's not like all boats will lift, right?
So we are now comfortable with 2 of the top large names that we definitely like. The biggest market caps, top 2. And then we also, like some of the mid caps which have corrected meaningfully in the IT services space and not the ER&D space. And in small cap, you pick up anything, everything has corrected quite decently. So we are liking all of them. So we have put a mechanism, we are evaluating what to buy and all those things. We have not yet started buying, but we are very, very constructive in the space now.
Okay. This is fun, Sandeep. We should do a whole show with 20 questions where you can guess the company. But I think those are good enough hints. Thank you so much, Sandeep Agarwal there of Sovilio. And, a change of mood actually from someone who's talked about the weakness of IT companies as an investment play basis valuations, not the intrinsic work of those companies, but basis valuations. He seems to be softening.
I want to make a pitch for that show. We should do a 20 questions.
20 questions. Yeah, that's a nice show to do, actually, if someone's into quizzes.
Yeah, for sure.
But, Morgan Stanley has just put out this note, this India strategy note, authored by Ridham Desai. And there is one line on IT companies as well, but I'm just going to go through all of it. He's saying extreme behavior is in sight. Valuations and sentiment are great indicators at extremes. Too rich and the market sets up for a bear run. Too low and the market sets up for an opposite run. Perhaps what we're seeing right now on the screens is an opposite run. Proprietary sentiment indicator with 30 years of history sits at new lows ex-COVID. Relative valuations signal a strong buy. India's relative valuations have rarely been lower except briefly during the global financial crisis. Sentiment has not been worse except for during the first phase of COVID. The market is pricing in a lot of bad news. So here's Rhythm's list of what to buy. Industrials, consumer discretionary and financials could be first off the block. They are equal weight tech. A relief rally into the earnings season is on the cards in our view. Utilities have held up well during this sell-off. Utilities could underperform along with defensives. Consumer staples and healthcare could also underperform. So that's a view coming in from Rhythm Desai. We've spoken in detail about IT. Let me just get Ajit Mishra's quick take on it. Infosys, TCS, Coforge. Let's look at these three on the charts, Ajit.
So Tamanna, IT definitely, like, we were discussing about Nifty witnessing a mean reversion movements. It's similar kind of move can unfold in Nifty IT also, because if you see that 20 EMA is around 30,700 mark, and we are currently hovering around 28,850 levels in the Nifty IT index. So extreme oversold positions. So basis that, in fact, if you see that, stock like Infosys, let's say, here also, despite the oversold position, we have hardly seen any kind of a respite or a rebound. So yes, it's going to be like not a V-shaped recovery, but yeah, a consolidation is more likely around 1200, 1250 zone, and then probably a rebound towards 1300, 1320 levels. But considering the kind of underperformance that this sector is experiencing, I still feel that one should refrain from any aggressive positioning. But in case if somebody is looking for any fresh position only in IT, then stock like Infosys, HCL Tech. HCL looks comparatively better to me, by the way, because the way the stock was outperforming before the decline of the IT, and still we are holding in a much better position to what we have seen in the other IT majors. So HCL Tech is a better play to invest in, even at current levels, and add more in case if it declines toward 1260 area.
So HCL Tech is better amongst those IT names. Indeed, even in trade today, it is performing better than the other frontline IT companies. Wipro is currently the worst performer on the benchmark Nifty 50, down about 1.6%. Even at this point, you have Infosys that's down about 1.25%, and TCS that's losing about 0.4% right now. But let's go across to Somit Sarkar now for our regular feature where he gets us the chatter from the dealing room. And the question really is, what is fueling this up move at this moment? Is it just a flash in the pan? Of course, expiry also playing out, Somit. But what are the dealing room checks suggesting?
Few stocks actually that dealers have highlighted here in trade today. Firstly, it's Urban Company. Now, there were multiple block deals that took place in trade early, and dealers are indicating that FI was a seller here. And on the buyer list, there is a large mutual fund who already owns a stake in Urban Companies, one of the buyers. And apart from that, a large prominent HNI was also a buyer in the bulk deals in trade today. So it will be interesting to see if the name comes out post-market or not. For DLF, multiple dealing rooms have recommended buy calls based on technical charts. So keep an eye out for that counter. It's already up around 3% in trade. Raymond Realty, multiple dealing rooms are pushing this counter as a value buy, because if you look at the market capitalization of this company, it's less than the gross development value of its properties. So it's considered as a value buy, and multiple dealing rooms are pushing this stock to their clients. For Swan Defense, the buzz on the street is that the promoter will be launching its offer for sale most likely today post market close or tomorrow, and the OFS size is expected to be anywhere around 600 crore rupees. So keep an eye out for that counter as well. And lastly, Coforge. That stock was down sharply in early part of the trade on the buzz of some weak Q4 numbers, but right now the stock has recovered on the back of the buy flows that we are seeing on the DI desk. The stock also features as one of the top picks for IT in the IT space for multiple broking firms. So keep an eye out for Coforge as well. It has recovered most of its losses that you had seen in early part of trade today.
Okay, so several interesting stocks. Somit, thanks so much for that. And the two that you mentioned, or rather that Somit mentioned in the real estate space, are standing out to me, right? So DLF, for example, multiple dealing rooms recommending buy based on the technical charts. And Raymond Realty, multiple dealing rooms are looking at this as a value buy as well. Ashish, the question to you, not on the technicals, but really on the way that the realty index as a whole has performed. It was the worst performer in trade yesterday. Some of these stocks really buckling under pressure. You have had instances in this realty pack as well of promoter buying at lower levels. And there are instances, for example, in Godrej Properties case, where promoter is bought and then the price has fallen further from there. So what would you suggest as the strategy in this space? Clearly there's something that the street is worrying about.
So, we have seen a very, very strong cycle in real estate post-COVID, because that time the inventory levels were close to, it started dropping from 42 odd months to almost 13, 14 months. But now we have seen that the inventory pileup is going up, and even if you look at the sales numbers is not very, very encouraging at this juncture. Although the market expected that post GST and income tax relief which government announced, there might be some jump in the discretionary spending, and this will get reflected into real estate space, but somehow we didn't got those reflection. So clearly I think it is one should avoid at this juncture because of the kind of uncertainty which is there. Nobody would like to have a very a significant amount of commitment at this juncture. So even if there is going to be a consumer discretionary spending, this is going to more visible on auto and consumer durable space, and real estate is something which I think might see some more consolidation going forward.
Okay, it is off considerably the low point of the day, and trading at the high point. In fact, the realty index as a whole, you see that big spurt that it's had over the course of the last 5 to 10 minutes or about 15 minutes or so, trading with gains of about 2.1% or thereabouts. Now, let's in fact thank Ashish as well as Ajit for joining in today. Ashish, Ajit, thanks so much for taking the time. Pleasure speaking with you as always. We have to slip into a very quick break, and we'll talk about key trading ideas before the closing bell, and also let's hope that the gains sustain heading into the close of trade. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
All right, so something exciting happening in markets right now, and we should pull up US futures, we should pull up European markets which are live, and we should pull up Indian markets where things are looking truly exciting. 23,619. Now, we've not seen this kind of a move up in the last few days. Yes, we did close up in the green yesterday, but after a bit of a patchy day, we've gone up quite sharply in the closing. Part of it could be the expiry effect. Remember, the Nifty expiry is also on, so some short covering in place. US futures have improved in the last few minutes. That's why we were showing you US futures. I want to show you what's happening with European markets as well, and we'll pull up the Brent for you as well. So a lot of factors that you need to track right now. So you have the FTSE and the CAC up in the green right now, and we'll get you the latest Brent rate, still above 100 for the Brent, but there seems to be a sense that maybe there will be some kind of solution soon. Manish Singh of Crossbridge Capital joining us now live from London. Manish, thank you for speaking with us today. What is the sense? Is there a sense that maybe we'll be closer to the end of this conflict, one way or the other?
That is a very, very difficult question, as you know. But I would say that if you look at the sentiments or the comments, when you have a US president that is asking help from China to intervene to keep the Strait of Hormuz open, one begs the question that why is China going to intervene? Because China is getting its oil supply. So if you see US asking for help or saying that China should be sending its own navy, I mean, this is completely different to what we have been told so far, where US always opposed China's involvement anywhere in the world, let alone in the Strait of Hormuz. US is saying that NATO will be in great difficulty if the allies don't help. So in my opinion, US just does not have the appetite or the interest in really fighting a war for long term. And that's a good sign. And therefore, you're going to see that as this view becomes widely accepted, you're going to see that the markets are going to keep coming back in green. And to the main question about the disruption to the supply of oil, 20 million barrel per day goes through that strait. If China is getting its oil, which is almost 5 million barrel, Iran is selling its oil, India is getting some as well, and then Saudis are sending maybe 3 or 4 million barrels through the East-West pipeline across Saudi. What is the total disruption? According to my maths, it's not more than maybe 3 or 4 or maybe maximum 5 million barrels a day, which can be made up by other sources. And combine that with US, that China has 6 months storage. There are other countries that have some storage. So if this continues for a month, then you have a problem in oil. But if it doesn't, then everything looks far more reasonable. And therefore, you're going to see, I wouldn't say risk rally on the upside, but at least not the sense of fear that one sees across, social media that we have seen last few days.
Yeah, the tendency, Manish, of course, is that that fear psychosis creeps up when there are memes being shared, and social media is much, much faster than the traditional media in that sense. But let me ask you things from the Indian perspective, right? Because we've seen this continued selling of foreign institutional investors, and of course, you can't argue against that. There has been a risk-off sentiment globally. And you've seen a slide in the Indian rupee, and the worry was that with the kind of dependence you have on crude imports and crude continuing to be above 100, there would be downward pressure further on the rupee. But if this is to reverse, Manish, in the way that you are suggesting, and if it does happen, I hope it does happen, then there is an argument to be made that Brent comes off, first of all, very quickly, and that the rupee should recover some of its lost ground. Is that not a good springboard for foreign institutions to come back to this country, at least in a small manner?
So I think you're absolutely right that if it plays out the way I have said just now, exactly what you're saying is going to happen. You will get some respite on the Indian rupee side. I think the fact that India imports so much of its energy, and you saw the news about the gas as well. I didn't know that 66% of households still use gas for cooking. I mean, some of the stats I'm finding out now. So the reliance on energy import obviously makes you vulnerable. And you can never put a zero probability on anything. You can never put a zero probability that this is not going to escalate, or Israel is not going to play foul, or US is not going to be more aggressive. So I would say that for foreign investors, or the investors, who think more than a few weeks for them to come back, I think it'll take time. It's a bit like, anybody who's looking to move to Dubai will think twice before they move to Dubai. So I think that the serious money, bigger money probably will take time, and we'll see things to settle down. What you will get is the fast money, the people who like to trade in and out, and they say, okay, we have a 10% chance of rally. Let's play this 10% rally. Now, I don't have numbers on what percentage of that makes up the Indian trade, but I would say that the patient money, the longer term money, if they haven't left, then they will take time to come back. And if they have left, then I would say that they will be very considered in their approach. Not just about India. Look at about Europe. People were going excited about buying Europe, and how European equities also sold off. So the choke point or the problems are definitely more.
Interesting analogy of moving to Dubai versus FIIs investing in India. Manish, just stay on with us. We want to take in a live report coming in from our colleague Aditya Rajkol, who's been reporting non-stop out of Israel. He's in Jerusalem right now, and he's been there, Aditya, you've been there now, 17 days, 18 days, reporting relentlessly since this war started. Is it looking like it's going to near any kind of pause, if not conclusion, anytime soon?
Well, 22 days, Tamanna. It's the fourth week for me here.
Yeah.
But the question really is that, is either side ready for any kind of a dialogue or a ceasefire? Doesn't seem like. On ground here, I'm in Jerusalem right now. Missiles have been flying here continuously over the last 18 days since the war began. And, I've been continuously interacting with the local diplomats here and the IDF, which is the Israeli Defense Forces, and both are confirming that they do not have a deadline or a timeline in place. They will continue to wage this war until their objectives are in place. One objective is to go against the Iranian regime and to completely annihilate the Iranian regime. And second objective is to go after the Hezbollah in Lebanon, while the Americans are under considerable pressure. They may not show it, but they are under considerable pressure. This was not how they had thought the war would shape up. They thought perhaps it will take a few days and the Iranian regime will come on the talking table. But now it seems like a long war situation. As you
Okay, we've lost that line, and as you could tell, he is traveling in Jerusalem. So, but the sense that we got, and the word that is coming in from Jerusalem, is that it's still uncertain how long this is going to go. And of course, the word from the US administration is that it will end soon, not this week perhaps, but it will end soon. Manish, this is kind of what you were talking about, and I think a lot of commentators and geopolitical experts have pointed this out as well, which is that there are three dance partners in this entire tango, and Israel has its own requirements to play out, but they've also pointed out that if the US does pull out, you're unlikely to see this war carry out in this format for too long. If that does take place, how quickly do markets come back, and what is the order of coming back that you see? Do you see it first in the US and then across emerging markets?
Yeah, so to come back to what you said, there are three dance partners, absolutely certain, but they're dancing to different music. And so the music for Israel, I don't think that stops, because they've always had this, and for their own reasons, domestic reasons, the threat that they feel from Iran. I will always listen to what President Trump is saying. And to me, when he said that, he expects allies to come there, Now, in geopolitics, everything that a politician says is for domestic audience. And the way I read that is that he does not have an appetite to send US forces into this war. And that's a very good indicator that, he is going to look to de-escalate. And so that's good for the market. So how is the market going to come back? Clearly, the pain point is through Brent. If I'm not wrong, I don't think India is getting any more discount on buying oil from Russia. Why should they? Why should Russia give discount given that, India needs oil and everyone needs oil? So that becomes a pain point. So unless that starts coming down, you will not see the real rally in emerging market or in countries that are exposed to energy, including Japan, Korea, as we know. But thankfully, India is getting a supply of oil, not least even from Iran. And that should be applauded for the diplomats and the prime minister and the job that they have done. So that's a good thing. But unless you have built in substantial storage, which is what the Chinese have done, you're relying on day-to-day supply, and that can disrupt it at any time if something was to get worse. So first is that the oil price has to come down. Second, you're going to see the US dollar rally has to stop. So people don't fear that dollar is going to strengthen. And then you will have other rallies. So in terms of equities, probably you'll have US rally first before you get big rally in India and emerging market.
Manish, thanks so much for joining us this afternoon.
My pleasure.
Morning your time, I assume. But thank you so much for joining us and giving us some perspective. I think one thing that comes out very clearly is from Trump's latest statements, the appetite for continuing full throttle in this war from the Americans seem to be waning. But something is definitely enthusing the markets right now. Off that 23,600 high, but looking quite strong, really, 164 points up. Sunny Agarwal joining us this afternoon. He is Head of Fundamental Equity Research at SBI Cap Securities. Jigar S. Patel, a Senior Manager, Technical Research Analyst at Anand Rathi, Share and Stock Brokers, also with us. Good afternoon to both of you. Sunny, is it banks that you think will continue to lead the charge? Are you feeling like this is time to actually go out and put in some money?
Yes, good afternoon, Tamanna. Good afternoon, everyone. I think, definitely. I think post severe correction, what we feel is that value is definitely emerging in, especially on the banking side, on private banks. So what we are seeing is that most of the private banks are now trading X of subsidiaries valuation closer to 1.82 time price to book, which is kind of very closer to long-term averages. And the way narrative has shaped up during the last 2-3 weeks is that because of the rising crude oil prices, there can be some inflationary pressure, and that can lead to increase in bond yield, and to some extent maybe we may go back to the rate hike cycle. But once I believe that all the negatives, all the narrative is already in the price, and as the things start to ease on the war side, we believe that maybe crude oil, once it start to go below $100, we see it will start moving back to an earlier narrative of 12 to 14% kind of trade growth for the entire banking space, and at the same time NIM stabilizing going from a next quarter onward. So I think definitely banks are trading at a very attractive valuation, should be added gradually in the portfolio.
Okay, all right, let's also talk about what HSBC is saying on the metals sector, and this is an interesting piece, right? They are moving on from first order to second order, which is higher price to demand disruption. You have production process for large companies that remain broadly unimpacted for now. You have emerging issues at downstream and customer level on account of supply chain challenges. Coal impact is transient, according to HSBC, and they say that aluminium is more a medium-term story that is playing out. There are some stocks that are reacting very sharply. We'll come to that in just a bit. Prices surge across steel, aluminium, coal, and energy. So it's not just one pocket, it's the entire cohort of underlying commodities that is seeing an up move, and understandably so, with the kind of issues that supply chains the world over are seeing right now. And of course, you've had those updates from the Gulf region, where you have major producers of aluminium that have come out and said that they are halting production. Pull up a Nalco, pull up a Hindalco. These are companies that have gone up quite substantially. The metal index now at the high point of the day up as much as more than 2%, but you have a few of these counters that are 3% now, few of these counters that are doing particularly well. Let me go across to Jigar. just to get a sense on whether or not you would play this on the upside. Jigar, even a month back, the wariness that was creeping in from technical analysts was that, look, these stocks have gone up too much. But at this moment, there is fundamental reason for them to be doing what they're doing right now as well. So would you bet on them going further?
In terms of Hindalco, currently the chart has been sideways since last almost a month and a half. So currently the trend is not clear. Maximum upside we can see till 970, 980, which is the higher end of the consolidation part. But I would suggest to book profit at higher end and wait for further more dip, because since the end of January, there has been a negative divergence on the chart. So I'm not feeling and even not comfortable at this level going long.
You know, I'm wondering how you're looking at metals right now, Jigar. I mean, the Nifty metal is really the biggest mover today, and metal stocks really off the charts. Any favorites there?
First of all, in terms of Nifty metal, there is a clear-cut breakdown below 11,800, and currently we are at 11,640. So there is a full chance and probability that we might face a resistance near 11,800 marks. So first of all, we need to clear this level. If it is going and closing above this level, then my favorite pick would be SAIL in Steel Authority of India. Because the kind of structure it is having exactly from 100-day exponential average. Today we had a very good run, approximately of 6% of very overextended on intraday terms. But overall, if Nifty metal is closing about 11,800, then definitely SAIL can find a target till 165, 168, and in that case we will keep a stop loss below 148.
So SAIL with just the stop losses in place, because remember these things can change quickly right now in what is essentially a volatile market. We have an interministerial briefing on right now. Let's quickly cut across and listen in.
Assistance for visas, logistical support where required, and facilitating transit arrangements. To give you an update on the airspace and flight status, since February 28th, around 244,000 passengers have returned from the region to India. In UAE Civil Aviation Authorities temporarily closed the airspace early this morning, which was later reopened after a few hours. Airlines continue to operate limited non-scheduled flights based on operational and safety considerations. On March 16th, around 55 flights operated from airports in the UAE to India. And today, around 70 flights are expected to operate from various airports in the UAE to destinations in India. All passengers can check revised and updated flight schedules directly with respected airlines. In case of any assistance, they can also approach our mission in Abu Dhabi and consulate in Dubai through the 24/7 helplines. Flights are operating from various airports in Saudi Arabia to different destinations in India. Flights are also operating from Oman to various destinations in India. Qatar airspace remains partially open. Qatar Airways operated 3 flights to India yesterday and is expected to operate 3 flights to India today also. In Kuwait, the airspace remains closed since 28th February 2026. Special non-scheduled commercial flights by Jazeera Airways of Kuwait are expected to operate in the coming days to India from the Al Qaisuma International Airport in Saudi Arabia. In Bahrain and Iraq, where airspace remains closed, transit of Indian nationals is being facilitated through Saudi Arabia. An update on the incident in Sohar city in Oman. The mortal remains of the 2 Indian nationals who unfortunately lost their lives in the incident in Sohar city in Oman have been received by the families in Jaipur today. We express our deepest condolences to the families of the deceased. The embassy remains in regular contact with the hospital authorities and the company to monitor the condition of the injured Indian nationals. None of the Indian nationals are reported to be seriously injured. On the Sea Face Vishnu, which was the incident which took place off the coast of Iraq in Basra, our
Okay, that portion of the briefing is from the Ministry of External Affairs. This is something that the government is doing every day. Alex, I think this is quite a good thing that they're coming out and they're giving information so that there is no confusion and that kind of panic on what's happening every day. So how many ships are coming, who's out there, what's happening with LPG. I think some of that panic is also perhaps eased.
No, it's very important that the government communicates on an ongoing basis, because the tendency in this kind of a situation is that in the absence of clear communication from the administration, there is the possibility of panic being created to say that there is no LPG available, there is no gas available.
No, so there is a shortage because there is panic booking. There's no doubt about it. And the fact is that there are restaurants who are now either curtailing or they're adding a surcharge to your bill.
But that can get exacerbated if it is not controlled. So you can have a situation that people are hoarding and they're calling for 3 or 4 cylinders as opposed to one. Because they're worried.
Yeah, so
we saw this during COVID.
We saw this during COVID with everything, and maybe that's what we've seen with these induction stoves also selling. But meanwhile, let's look at what's happening in the markets, and what you're seeing in technical terms sometimes could be described as a dead cat bounce. Now, this is a term we've been using a lot on the channel as well. You've been probably hearing this, what is a dead cat bounce? So here's what it is. It refers to a small burst of positive activity in the markets. So equities falling for the past few weeks, if they see a sudden upward price movement, it's sometimes called a dead cat bounce. It mostly results from short-term investors buying before another fall, and gains are likely to be erased in just 1 or 2 weeks. It can last between 3 days and up to 2 weeks. I believe this actually comes from an experiment that was done, and that even if the cat is dead, thrown from a height, you might see a slight bounce. Doesn't mean the cat is alive.
As gruesome as that sounds. That is gravity at play and the search for equilibrium. But ultimately, it is something that you should be wary of. If you see green on the screen where you might have started a little bit weaker, it's not necessarily indicative of a trend, because take a look at the market right now as well. And I would love to bring Jigar on to this, which is that you are now trading off the high point of the day for the benchmark Nifty 50 at 23,560. So you've broken below once again that 23,600 mark. And you're as much as 95, 96 points, close to 100 points off the high point of the day as well. Jigar, what does that tell you? You're still in a sell on rise market, aren't you?
See, definitely not, because sell-on rise has been, over a lot far. Because see, in Nifty currently there are 2 to 3 reasons why I feel that the bottom may be near or may be done yesterday. First of all, the yearly pivot support, which is somewhere near 23,140, and yesterday we made a low of 22,955 to be approx, and exactly it was aligned with 14th April bullish gap from 2025 year. And overall in the past, whenever Nifty test yearly support pivot, right from 2025, we again reverse from that particular zone, even in 2022 and even in somewhere 2016 as well. This is the one reason. Second reason, even the trend line on hourly chart. See, since last 1.5 months, the trend line was not taken out, and today we have taken out that particular trend line. And before that, there was a bullish divergence on hourly chart as well. And on daily chart, there has been a impulsive behavior. Impulsive behavior is basically the V-shaped recovery in this Nifty daily chart. Third thing, the MACD indicator, which is at extremely lower levels. If you look at the MACD currently way below 500 levels, and these are historical levels, and any sort of a positivity in the market can create bottom at this particular level. And the fourth thing, what I'm believing, see, for next 2 or 3 days, or maybe till next Friday, if you are not going below yesterday's low, then definitely this is the bottom, and we may again start heading towards 24,500.
Okay, I'm sorry I'm going on and on about this, but I'm finding this interesting. So the term dead cat bounce apparently originated in the 1980s by a Wall Street analyst called Raymond DeVoe, and he coined it with this example that if you throw a dead cat off a 50-story building, it might bounce, but it is still a dead cat. Jigar says this is definitely not a dead cat. Jigar, you think that we're going to see a further upside from here on?
Yes, definitely. Again, see, there has been a chance that again, see, since last 2 days, if we count the number, the points right from the bottom of 22,955, we had a rally of approximately 600 points, including today trading session as well. So there is a chance we might go and test 23,400 or 350 again in coming few days. But if we are not going below this 22,955 on daily closing basis, then definitely we are going to turn from this level.
Sunny, a quick word from you, whether you think that there are cats involved or not, or whether we have hit a bottom, and whether there are opportunities even at this point to be bought into. If you were to list out the 3 or 5 ideas that you think are absolute buys at this point, cats or otherwise, what would they be?
Yeah, so I would like to say, as per Jigar's explanation, it seems that it's not a dead cat bound. It seems dead cat is alive now on the technical parameter. So maybe a few stock which I would like to recommend is one is APL Apollo Tubes, where we have seen a record high volume number during the Q3, and we believe that Q4 is something where the strong performance should continue. So maybe with a price target of 2,400, one can look forward to APL Apollo Tubes. Among auto ancillary, Lumax Auto is the one stock which we like. Again, exposure to a passenger vehicle as well as two-wheeler, three-wheeler, and to some extent commercial vehicle space. So again, this is the one company where we believe the earning growth should continue on the back of recently acquired 2 companies. So Lumax Auto with a price target of 1,800. One more stock from an auto ancillary pack, that is SJS Enterprises, which predominantly cater to aesthetic in two-wheeler as well as passenger vehicle space. So this is the one company wherein they have recently added Hero as their new client. So that should drive the growth in FY27. So SJS Enterprise one can look forward to with a price target of 2,100. Among the frontline company, I would like to add Bharti Airtel in the current drawdown, as I feel that the market is overreacting to its foray into an NBFC business, wherein its capital allocation policy is being questioned. But I feel ultimately going forward, the way ARPU is likely to go up at a rate of close to 7 to 8% every year, I feel the company is well placed to deliver a healthy earning growth going forward. And from a banking space, ICICI Bank, which is one of a leader in private banking sector.
Okay. Sunny, Jigar, thank you so much for joining us. We've been talking about the animal farm of the markets. I saw there's of course bull and bear to hai. There's also apparently a kangaroo move, which is what Indian markets are showing, and that's what the intraday chart will show. Up and down. Hopping up and down. 23,600 is looking difficult. We're probably not going to cover that kind of trajectory, but from the lows, we've done fairly well. Yeah. You have crossed crucial levels as well technically, so that's not half bad. The Nifty heat map, just about a few minutes to go before markets close. Let's pull up the Nifty heat map and show you what's happening there. A lot of last minute news coming in. We look at BEL as well. BEL possibly seeing a spike, about 1,000 crore orders. News coming in on BEL. Eternal, the star of the show really today, but remember Eternal has also lost a lot of steam. It's not been this low since several months. Tata Steel, Mahindra & Mahindra, second day in a row on closing has been doing really well. Wipro down and out, Infosys, TCS, a lot of the IT companies getting pushed down, Tata Consumer, Cipla among them, but the breadth is good. The breadth is not bad at all. India VIX is 8.5% down.
Yeah, absolutely. I also want to talk about the broader markets because we are ending off the high point of the day for the benchmark Nifty 50, 150 points thereabouts. But the mid-cap index is holding with gains of about 1% or thereabouts. Small-cap index hit a high of about 0.7%, 0.8% now off the high point, up about 0.6%. But the advanced decline ratio remains robust. It remains robust. It's actually a pretty decent number to end the day.
Yeah, it's narrow debate, but not bad at all. Can't complain.
Yeah, and let's pull up the sectoral indices as well, because you see more green on the screen for the Nifty 50. That indeed is a picture for the sectoral indices as well. Just IT and FMCG not doing particularly well. But take a look at this. This is where the action is. The metal index and the steel majors coming up as much as 4%. That should tell you something, but it's not just the steel majors, right? You had Nalco that was gaining as much as 6% or thereabouts. So there is a structural uptrend that you're seeing here. It may not be tradable, but it might just be witnessed in the fundamental fundamentals that you're seeing. The auto index coming off yesterday's drubbing that they saw, and quite a few of those names doing
Auto
well.
actually recovering second in a row. And I wonder what it is. Maybe it's the thought that more companies will take price hikes after Tata Motors CV, because auto was doing fine yesterday as well. Defense has risen to the occasion. Realty is seeing an upturn. You know, all in all,
Realty is recovering.
Realty is recovering. This has been as better a close as one could have expected. Hopefully the momentum continues tomorrow. It's become tricky times where you don't know what happens in the next 12 to 14 hours. Could be very, very emphatic in determining how markets open. But so far, we seem to be continuing the trend. That's all the time we have on Indian Market Close. From Alex I and the people who put the show together, thank you so much for watching. Stay tuned. All the action continues on the other side on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome viewers. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today first. So Dalal Street wrapped up another volatile day of trade in green in the third dead cat bounce seen in 3 weeks. Now Sensex has jumped more than 500 points. Advance decline ratio has ended in the favor of the advances. And looking at the sectoral picture, so that was tilted sharply in the favor of gains, with most of the sectors managing to claw back the previous losses. Metals were shining bright at close, with autos in the fast lane, and also realty and consumption were also in good shape. So on the flip side, if we look at IT and FMCG were on the back foot and the only two sectors that were in red. And viewers, let's look at JM Financial now. That remains bullish on Eternal, maintaining a buy rating with a target of 400 rupees. And the brokerage believes that, the Blinkit business will emerge stronger, adding that recent supply side disruptions may be overstated. JM Financial also, retained its 18% year-on-year November growth forecast for quarter 4 of FY26 and has said that the concerns around new competition in the food delivery are exaggerated, and it recommends that long-term investors with a 12 to 18 month of horizon should aggressively accumulate the stock. Now, next stock in focus is Oberoi Realty that has entered into a development agreement for a Mumbai land parcel located at Aram Nagar in Versova, Andheri West, Mumbai, owned by MADA. So this project will be developed in line with Mumbai's development control and also promotion regulations 2034. So based on the current provisions, Oberoi Realty expects its share of the free sale component to be around 17.18 lakh square feet of the RERA carpet area. Next stock in focus is Sun Pharma. That is after the US FDA has accepted its biologics license application for Ilumya. So the company has received a nod to explore an expanded therapeutic use with Ilumya now aimed at treating adults with psoriatic arthritis, and if approved, the drug would really move beyond its current use in plaque psoriasis and also strengthening Sun Pharma's biologics portfolio and also opening up a larger treatment opportunity. Next stock in focus is NoSil. That is, after announcing a 130 crore of capital expenditure plan for capacity expansion at its Dahej manufacturing facility. Now, the investment is aimed at strengthening production capabilities and also supporting future growth across the key rubber chemicals. So this move signals NoSil's confidence in the long-term demand and also its focus on scaling the operations to meet customer requirements. Next stock in focus is Zydus Life Sciences after its US arm has entered into a licensing agreement with South Korea-based PRG S&T, which is a company focused on rare genetic diseases. Now, under the pact, Zydus will license progerin, which is a drug aimed at treating Hutchinson-Gilford progeria syndrome, and also this agreement strengthens Zydus' presence in the rare disease and also specialty medicine space. Next stock in focus is Persistent System that is set to roll out AI-powered solutions for the healthcare and life sciences sector in partnership with NVIDIA. And the company has said that the collaboration will allow the hospitals, pharma companies, and also research organizations to deploy advanced generative AI and also precision medicine tools using NVIDIA specialized software and also hardware ecosystem. Now, Persistent will integrate NVIDIA's BioNemo NIM microservices and also CUDA accelerated platforms into its offerings, enabling drug discovery workflows, medical image analysis, patient care automation, and also large-scale clinical data processing. So the company has said that the move is aimed at strengthening its position in healthcare AI, which is one of its fastest growing verticals globally. Next stock in focus is Kalyan Jewellers that, as disruptions in the Middle East begin to weigh on the operations. So according to Axis Capital, the company's planned store openings in quarter 4 and quarter 1 could see delays. And in addition, the closure of factories in Morbi is impacting the supply of construction materials, potentially affecting the fit-outs and also expansion timeline. So this evolving situation could really pose short-term execution challenges for the jewelry major. And viewers, let's look at some brokerage notes now. JP Morgan has upgraded Cyient DLM to overweight from neutral, setting a target price of 400 rupees. The brokerage notes that the stock has fallen 33% over 3 years, making it the cheapest in the EMS space. And JP Morgan has rejected concerns that the EMS growth story is over, forecasting a 22% revenue CAGR for Cyient DLM's EMS business over FY26 and FY28, and also remains optimistic on a sector recovery. Next stock in focus is Bajaj Electricals that has announced the acquisition of Morphy Richards brand rights for 141.4 crores, and this is under a definitive agreement. The company will acquire the intellectual property and brand rights across India and also select South Asian markets, gaining full ownership and also control. So this move builds on over 2 decades of partnership with Bajaj having licensed and also grown the UK origin brand since 2002. So this acquisition strengthens Bajaj Electrical's presence in the premium home appliances and also personal care segments. Next stock in focus is Power Mech that has won a major order from Adani Infrastructure worth about 710 crore rupees, and this contract covers operations and also maintenance at the Roda thermal power plant in Maharashtra, including regular overhauls of its 5 big units. So the work is set to run for 5 years from the start date, adding a strong boost to Power Mech's project pipeline. Next stock in focus is Time Technoplast that has picked up a new order worth about 116 crore rupees from a major public sector company, and this deal is for supplying type 4 CNG cylinders. This is adding to the company's growing presence in the clean fuel storage solution space. Next stock that was buzzing away in trade was Puravankara, and it has received a letter of intent worth about 280 crore rupees from VIT in Vellore. So this contract is for building a new academic block on the campus, marking another large institutional project for the company. And this order adds momentum to Puravankara's construction pipeline in the education sector. Next stock in focus is Omax that has received RERA registration certificates for 2 of its upcoming projects, clearing a key regulatory milestone. And the approvals allow the company to now move ahead with the construction and also sales, giving a boost to its development pipeline. Now, this also signals stronger compliance and also transparency in its ongoing project rollout. And whereas Kotak Securities is staying constructive on India's auto sector, also expecting steady growth in the passenger vehicle sales next year. And this is led by strong SUV demand, which is a firmer rural outlook and also new launches. And margins may stay under pressure for now because of the commodity costs, and also global luxury makers also warn of weaker profitability ahead. But Kotak believes that the recent fall in the stocks like M&M and Maruti is overdone, and sees it as a good entry point, even as the gas supply situation remains a risk, to parts of the auto chain. And viewers, in an interministerial briefing today, the government has said that the crude inventories remain adequate and also refineries across the country are operating at full capacity with no dry out reported at fuel pumps despite the ongoing Middle East crisis. However, the authorities have also confirmed that 70,000 panic bookings were made in a single day. And this is amid, the supply fears, and officials have said that states have been asked to fast track the permissions for laying gas pipelines, and also all the new PNG connections must be approved within 24 hours as part of emergency energy sector measures. However, the LPG availability continues to be a concern, even though no household dryouts have been reported so far. The government has said that 94% of domestic LPG bookings are now being made online, and usage of the delivery authenticity code has risen to 76%, helping curb the diversion. So to prevent the misuse, states including Bihar, Delhi, Haryana, Rajasthan, Manipur, Gujarat, Himachal Pradesh, Karnataka and Uttarakhand have issued orders to allocate non-domestic LPG separately. And whereas the government has extended relief measures for export cargo till March 31st as disruptions at the Strait of Hormuz continue to impact India-bound and India-origin shipments. So the Central Board of Indirect Taxes and Customs has issued a fresh SOP under the Customs Act to support the exporters facing diversions. Delays and maritime blockages caused by the ongoing Iran war has linked conflict. This is the linked conflict in the Gulf region, and also the revised guidelines now allow the international, transshipment for less than container load, which is the LCL cargo, at all the notified ports and also airports. Now, a facility that was previously limited to a few locations such as Chennai and Cochin.
And because India's LPG consumption has seen a sharp fall of nearly 17.7% in the first half of March as the ongoing conflict in West Asia triggers major supply disruption. Now, preliminary industry data shows consumption declined to 1.147 million tons, which is down from 1.387 million tons, and in the same period last year, and also 26% lower than demand recorded in the first half of February. So, India imports 60% of its LPG, much of it transported through the Strait of Hormuz, which has been effectively shut, following the strikes by the US and Israel on Iran and Tehran's retaliation. Now, with supplies from Saudi Arabia and the UAE impacted, the government has restricted the LPG supply to commercial establishments like hotels and industries to safeguard the availability of domestic cooking gas. And whereas Air India has continued, operating 44 flights to and from the Middle East, even as parts of UAE airspace were temporarily shut following a drone-linked fire incident that halted the operations at Dubai International Airport. Now, the airline has said that it has been closely coordinating with the authorities and is also rerouting or rescheduling the flights wherever necessary amid the heightened regional security situation. So, the UAE's closure of certain airspace corridors has led to delays and also diversions across the carriers, with Dubai Airport briefly suspending the operations. And Air India has confirmed that while Dubai-bound operations were affected, flights to other Gulf destinations were maintained through alternative routes. And the airline has said that safety remains the top priority as the wider Middle East conflict continues to spill into the civilian airspace as well. And US TCS has announced a major AI partnership with NVIDIA, launching a new enterprise platform called TCS Rapid Outcome AI. This is designed to help companies run and scale the AI applications across the sectors, including manufacturing, telecom, banking, retail, and life sciences. So this platform reportedly integrates a predictive analytics, generative AI, and also NVIDIA's advanced accelerated computing stack to automate the decision, cut manual interventions, and also improve productivity across the operational environments. And this platform is set to enable enterprises to simulate the real-world scenarios, build AI agents, and also deploy real-time monitoring system for factory floors, warehouses, telecom networks, and also the retail store. And viewers, OpenAI is in advanced discussion to form a joint venture with major private equity firms, including TPG Brookfield Asset Management and also Bain Capital, aimed at boosting adoption of its AI software. Sources have said that the proposed JV could carry a pre-money valuation of around $10 billion, with investors committing roughly $4 billion. So while the firms have declined to comment, OpenAI's applications, chief Fidji Simo has described the plan as building a dedicated deployment arm for its technology, and this is signaling a sharper focus on the commercial scale-up as well. Whereas the US Securities and Exchange Commission is preparing a proposal that could end the mandatory quarterly earnings reportings for listed companies. So according to the Wall Street Journal, firms would be allowed to report financial results twice a year instead of every quarter, though voluntary quarterly disclosures would still be permitted, and the proposal could be unveiled as early as next month and also will go through a public consultation process. And this is backed by Donald Trump and also Security Chairman Paul Atkins, I beg your pardon. Supporters have said that the change could really curb the short term and also reduce the compliance cost. So critics are, however, they're warning that it may weaken the transparency and also increase market volatility. And because Amazon is pressing the fast forward button on deliveries in the US. So the e-commerce giant has rolled out 3-hour delivery across nearly 2,000 cities and towns, with 1-hour delivery now live in hundreds of locations. So the move is targeting the time-starved consumers looking for quicker access to daily essentials. So over 90,000 products, from groceries and medicines to clothing and toys, are now eligible. So Amazon has said that the service, tested on a smaller scale last year, will expand further in the coming months as it sharpens, its edge in the race for instant convenience. And viewers, amid the escalating Middle East tensions, India has secured a critical energy lifeline. The LPG tanker Nanda Devi, carrying 46,000 metric tons of fuels, have reached Gujarat early Tuesday after safely navigating the Strait of Hormuz. Now, the second such arrival in just 2 days, and on Monday, another Indian vessel, Shivalik, docked with 40,000 tons of LPG at Mundra port. Now, the voyage was enabled through coordination by the Shipping Corporation of India, and this is backed by Indian and Iranian naval assistance, as Iran sharply curtails the traffic through this vital choke point. So the successful transits offer relief for India, which is a major LPG importer, even as regional conflict drives global oil prices sharply higher. And viewers, the Delhi High Court has ordered the removal of social media posts linking Himani Puri, daughter of Union Minister Hardeep Singh Puri, to late American offender Jeffrey Epstein. Now, Justice Mini has directed that the content must be taken down within 24 hours and also restrained users from publishing or circulating such material. Now, the court has said that the platforms must step in if users fail to comply. Also noting that Himani Puri, as she has a prima facie case and could really suffer irreparable harm, and also the matter will be heard next in August. Viewers, a massive overnight rescue operation has cleared more than 1,500 of vehicles stranded near the Atal Tunnel after sudden heavy snowfall has trapped thousands of tourists in sub-zero conditions. And authorities have said that the blizzard has hit on Sunday evening, burying the Manali-Lahore stretch under, over 2 feet of snow, forcing many to remain inside their vehicles for nearly 20 hours. And teams have worked through the night to evacuate between 1,100 and 1,200 vehicles towards Manali by around 4 a.m., with the remaining cleared soon after. And an orange alert has been issued for March 19th, which forecast to heavy snowfall, lightning, and also winds up to 60 km per hour, prompting the authorities to advise tourists to avoid unnecessary travel. And here's the CBSE and CISE have scrapped the board examinations across the Middle East as the region continues to face severe security threats linked to the ongoing Iran-US-Israel conflict. So the Indian embassy has stepped in, coordinating with schools, parents, and exam centers after flight disruptions, airspace closures, and also safety alerts made it impossible to conduct the exams as scheduled. So the cancellations affect the students in Gulf nations, including UAE, Oman, Qatar, Bahrain, and Saudi Arabia. Now, authorities have said that new exam modalities and also alternative arrangements will be announced soon, while ensuring no student is academically disadvantaged. Now, with the Middle East witnessing missile and drone strikes and also major operational disruptions, now the embassy has advised the Indian families to follow all the local safety guidelines. And viewers, tensions have spiked further in West Asia after Iran launched drone attacks targeting areas near the US embassy in Baghdad, striking a hotel and also hitting an oil field in the region. Security sources have told local media that multiple drones were intercepted, but some caused damage, intensifying fears of the conflict spilling deeper into Iraq. Now, amid the escalating confrontation, US President Donald Trump has urged the allies to send naval forces to help reopen the Strait of Hormuz, which Iran has effectively choked off during the war. But European governments have rejected any sort of military involvement, saying that this is not a NATO mission, and also warning that unilateral escalation could worsen the crisis. So Trump has insisted that help is on the way, though no coordinated intervention has yet been announced. And Israel has claimed responsibility for assassinating a commander in Iran's Basij militia. And the Israeli military has said that the officer was targeted inside Iran as part of its escalating strikes amid the ongoing regional conflict. So the Basij, which is a paramilitary arm of Iran's Revolutionary Guard, has played a central role in Iran's internal security and also recent military mobilization. Now, Iranian officials have not immediately confirmed the killing, but the report comes at a time when both the sides continue to exchange large-scale drone and also missile attacks across the region. Sri Lanka has announced a 4-day work week, declaring every Wednesday a public holiday as a contingency measure amid the potential fuel shortages linked to the Middle East conflict. So the decision takes effect from March 18 and will apply to schools, universities, and the judiciary, while essential services like health, ports, water, and customs are excluded. So the move follows fuel prices hikes, rationing, and also long queues at the petrol stations. And authorities have said that talks are ongoing with India and Russia to ensure steady fuel supplies as disruptions in the Strait of Hormuz continue to impact the global energy flows. And Cuba has been plunged into an island-wide power crisis after suffering its third nationwide blackout in 4 months, impacting all 11 million residents. Now, aging infrastructure, fuel shortages, and also US oil sanctions have pushed the grid to breaking point, forcing the hospitals to halt surgeries and also deepening the economic stress amid the turmoil. And Trump has renewed the provocative remarks about a possible takeover of Cuba, calling the country severely weakened. So Havana blames the crisis on an energy blockade and also disrupted the oil supplies, with standoff now mixing energy insecurity with rising geopolitical rhetoric. And India is condemning Pakistan's reported airstrikes on a hospital in Kabul, calling the attack deeply concerning. New Delhi is urging restraint and also stressing the need to protect the civilian infrastructure in conflict zones. So this development raises fresh tensions in the region with concerns over escalation and also the safety of the civilians. So India has said that the international humanitarian norms must be respected at all the times. And UK and Ukraine are moving closer on defense cooperation with a new pact focused on countering the rising drone threats. Now, the agreement comes amid the escalating tensions linked to the Iran conflict, where drone warfare is becoming a key risk. Now, both the sides are looking to combine Ukraine's battlefield expertise with British capabilities to strengthen the defense system. So this move, also signals deeper strategic alignment as security concerns widen beyond Europe. And multiple explosions have rocked northeastern Nigerian city of Maiduguri, killing at least 23 people and also injuring more than 100 others, according to police authorities. The attacks were carried out by suspected suicide bombers on Monday evening. The blast come just hours after an earlier assault on a military post blamed on jihadist groups. The fresh violence has shattered a period of relative calm in the city as Boko Haram and also Islamic State West Africa province step up attacks across northeastern Nigeria. And viewers, now let's look at some sports news. Real Madrid have received a major boost ahead of their Champions League showdown at the Etihad. So Kylian Mbappe is set to return from injury as Madrid aim to knock out Manchester City in the last 16-second leg. So the French star missed the first leg through a knee issue, which Real won 3-0 in Madrid. Now Mbappe's return adds firepower as Carlo side looks to finish the job away from home. And viewers, with that, it's a wrap on this edition of Market Express. But please don't go anywhere and stay tuned to NDTV Profit. This is Himakshi Bahuguna.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most
Market continues its gaining streak with benchmarks closing the day around 1% higher. Nifty ends about 23,500 while Sensex gains more than 500 points. Mid and small cap indices finished mixed. All sectors barring FMCG and IT end higher. Brent and NYMEX jumped 2% each on uncertainty over forming a US-led coalition to protect shipping through the Strait of Hormuz. Trump encourages nations dependent on Hormuz to help the US. Says some are very enthusiastic about it while some are not. Government extends relief measures for export cargo till the 31st of March. Issues specific procedure allowing containers returning to India to be taken off the vessels at the port terminal without filing the standard import paperwork. Asian countries scramble to save fuel with Sri Lanka introducing a 4-day week for government institutions, while Pakistan closing down schools and universities for 2 weeks. South Korea caps domestic fuel prices. Auto component manufacturers feel the heat of the Middle East war. ACMA highlights that the raw material prices have gone up by 2.5 times, with delivery timelines extending by 2 to 3 weeks. Government allocates additional export quota of over 87,000 tons for FY26 amid geopolitical tensions. Mills must export the allocated sugar by the 30th of June this year. India slams Pakistan over the airstrikes at a hospital in Afghanistan's Kabul, calls the attack that left 400 people dead and 250 injured a barbaric and cowardly act of violence. Hello and welcome. A very good evening, viewers. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you the latest insights and updates on markets, national as well as international news. Let's begin with first checking the Dalal Street that gained momentum as it approached the closing bell because benchmarks rebounded and erased most of their early losses. The Nifty crossed 23,500 and 30-pack Sensex settled close to 76,100. This signaled better investor confidence in Indian equities at a time when global energy supply chain has been disrupted due to the Middle East conflict. Metals, auto and the defense sector led the charge today, with just the IT and FMCG pockets ending in the red. Broader markets did fairly well too, with mid-caps especially outshining the gains of the benchmark. In fact, let's get in my colleague Puneet to take us to all the stock-specific moves of today's market action.
Well, it was an interesting day of the trading session, to say the least, because we've seen consistent buying in the first hour of the trading session, seen some selling then and then coming back in the last couple of hours. That momentum seen in the Nifty 50. You saw stocks like Eternal as well as Tata Steel leading the momentum for the benchmarks today, but largely the recovery of almost 600 points in the Nifty IT was also one of the key factors that got all the indexes in focus today. Now, when you look at the Nifty 50, it largely ends in the green, up over 0.5%. We are above the 23,500 level. It's a key one that we've been consistently highlighting. And while the long-term supports continue to be operating at 23,400 as a level, we need some momentum to build across over the next 200 to 300 points. And at this point of time, at least for today, that was visible. You've also seen that the broader market ended on quite a mixed note. In the morning at around 10:30, stock, there was the 2:1 advances that was leading the pack. But by the end of the trading session, it was very, very mixed, 1:1 almost in terms of that ratio. So you saw the Nifty small cap up over 0.5%. Stocks like Chennai Petroleum as well as transformers and rectifiers actually were both up over, in terms of the trading session by over 5%. While you saw the mid cap index, which did much better, up about 1% in today's trading session. Amongst them, you did see Lloyds Metal as well as National Aluminium or NALCO also doing well as well. So overall, when you look at the index and the trading session, you see the Nifty Auto, which did very well in trade. Nifty IT saw a recovery as I highlighted, but largely Nifty Metal, all of those pockets did well in today's trading session. You could say a lot with the expiry for the Nifty 50 as one of the key factors, but in terms of trend formation, we seem to be a little early, but a good start nonetheless.
A good start and a good end nonetheless. But given the reduction in missiles and drones being used in the Middle East conflict, Dinshaw Irani, CEO of Helios Capital India, believes we may be witnessing the end game of the war. During a conversation with us earlier today this morning, the market expert also predicted that while oil may not go back to its 60 to 65 range, which was normal, even a $70 to $75 per barrel range will be a big breather for us. That means India. Listen into that bite.
Our belief is that we are somewhere in the end game as such in terms of the war, and crude may not normalize back to those $60, $65 a barrel, but even a 70, 75 is a very big breather for us. And why we are saying is in the end game is because you can make out from the kind of projectiles being fired out of Iran, the numbers have come down quite sharply. They started off with some 500 missiles a day. Now it's down to some 10 missiles a day. They started off with some 800 odd, drones a day. Now it's down to some 20 drones a day. So it's obvious that they're somewhere close to the end of their ammunition and may not last out that long as such.
Meanwhile, oil prices have jumped a tad bit more after briefly relaxing yesterday. The global benchmark Brent has inched up to near $104 per barrel, whereas the US-based WTI crude has risen around 4%, close to $97 per barrel. Now, this rise comes on the backdrop of mixed signals on the timeline of the war. More than that, it is also due to the lack of clarity on the willingness of countries to join America police the Strait of Hormuz. Yesterday, a key positive for oil was that US Treasury Secretary Scott Bessent said that the US is allowing Iranian oil tankers to pass through the Strait of Hormuz. But that effect on oil seems to have faded off, especially today. Located between Oman and Iran, the strait functions as a vital artery for the global oil trade, which now stands choked in this war. And that's why the volatility in the oil prices. Meanwhile, the rupee is trading at $92 against, 92 against the US dollar, marking high volatility and sustained weakness in the Indian currency. In fact, Saurabh Mukherjee, founder and CIO of Marcellus, expects the rupee to move towards $100 over the next course of the year. Listen into that conversation as well.
Move towards 100 over the next year or so. The FTAs should come through. The EU FTA and the UK FTA are attractive FTAs for India. A combination of attractive currency, attractive FTA, the West wanting to reduce its dependence on China. I think high oil prices are here to stay. High oil prices are here to stay, and India's inability to exert diplomatic muscle in tricky situations such as the one we are seeing in the Middle East, I think is increasingly becoming apparent. So it's not apparent to me that the relief rally will be a double-digit relief rally, but yeah, I would be in the camp that says we should see a 4-5% recovery in the market as and when the Straits of Hormuz open up.
Viewers, the government has extended relief measures for export cargo amid the prolonged Iran conflict, allowing return vessels to land at ports different than that of origin, among other relaxations. Meanwhile, freight forwarders and exporters continue to complain of sky-high war risk surcharges and urge strict advisories against shipping lines. My colleague Rishabh is here with all the details on this story.
Right, what we're picking up is the fact that the government has extended the sort of relief measures that it had brought out just about a week ago for return cargo, and this is of course because the conflict in Iran is sort of escalating. It is prolonging till now, and what we're seeing is that earlier these measures were in effect till March 23rd. Now they've been extended till March 31st. What we're also seeing is that there's specific procedure that has also been now issued for vessels that have originated from one port but are returning to another. Earlier, you already had these vessels that were being shunned from the Strait of Hormuz, and then they were forced to return to the same port of origin. But now there has been detailed procedure that has been issued that details as to how these vessels need to be treated if they land up at a different port. Secondly, what we're picking up is that the procedure for international transshipment for less than container load, which is containers that are not fully packed, that has also been issued now. And earlier this was limited to select ports like Cochin as well as Chennai, but now this has been extended to all notified ports as well as airports. So that is a major relief for freight forwarders as well as exporters. Another one that is very important is that temporary unloading as well as storage of diverted liquid or bulk cargo, that has also been permitted in special cases. So that is a major one for the liquid cargoes that actually go to and from India. So those are a few ones. Apart from that, there is a new Indian customs system that is being introduced that will help with certain cancellation of shipping bills. So that's also a new feature that we're picking up. What we've also picked up from exporters and freighters is that their sort of grouse with shipping lines is continuing, and that is despite the various advisories that have been put out by the government to ensure transparent war risk surcharges. But exporters have been complaining, but this particular relief that has come in from customs, the extension as well as the broadening of the scope of the relief, that is a welcome sign for exporters.
And on another positive note, Nanda Devi, an Indian tanker carrying about 46,000 metric tons of LPG, arrived in Gujarat after safely navigating the Strait of Hormuz, making it the second LPG carrier arriving in India in 2 days. On Monday, Indian LPG carrier Shivalik, carrying about 40,000 metric tons of liquefied petroleum gas, had reached Mundra port in Gujarat. Nanda Devi has docked at Vadinar port in Devbhoomi Dwarka district. Another vessel, in fact, Jug Ladki, is scheduled to arrive today as well. My colleague Paris Dama now shares us all the details from Gujarat's Vadinar port.
Vadinar port is one of the ports which is very much in discussion right now, because this is the port where LPG carrying cylinder vessel called Nanda Devi reached last night early at 2:08. You can see this whole sea, 1,000 and Arabs of nautical miles sea is there, and in this situation where United States of America and Iran is in war, and Strait of Hormuz is one of the most important route for crude oil and LPG gas, where from there 2 vessels has reached India. One went to Kandla port yesterday, and today the second LPG gas vessel, a cylinder vessel, has came to this very port where we are standing, but it's not docked on the port because the process is very much difficult, and it has been docked nearby 10 to 11 kilometers away from this port.
Viewers, amid the ongoing war, Asian nations are scrambling to conserve fuel and protect energy supplies. Indian government, in fact, has urged citizens to move to PNG connection and has prioritized domestic supply. India's neighboring country, Sri Lanka, has declared Wednesdays off and has moved to a 4-day work week for government institutions. Pakistan, Bangladesh and many other countries have also taken measures to save energy. My colleague Nisha Podar joining us to give us all the updates on this particular aspect of energy supply. Nisha.
That's right. In fact, as the world really scrambles for fuel, several countries across the globe have been impacted on economy as well as, more importantly, life as well as business as usual. Like, for example, Sri Lanka has already declared a 4-day work week for its government institutions. Wednesdays are declared off for these offices. QR-based fuel rationing system has been introduced. In our neighboring country, Pakistan, schools and universities are shut now for 2 weeks. Work from home has been announced for the offices. In Bangladesh, on the other side of India, public and private universities are shut. South Korea, remember, has called for domestic fuel prices to be capped, and limits on coal-fired power generation capacity has also been lifted, having environmental impact. Nuclear power plant utilization raised to as high as 80%. When we talk about Philippines, government officials have moved to a 4-day work week for the government. Thailand, where their government officials again asked to work from home. People asked to really conserve fuel in amidst these shortages. Vietnam also has called for businesses to really encourage work from home to save on fuel. Myanmar has also said that private vehicles will be allowed to ply only on alternate days. Now, for India, remember, the March consumption dropped by over 17% due to war-related shortages. The disruption in supply of commercial cylinders has been seen all across, remember, impacting the commercial institutions. LPG shortage has forced brief closure of several of the hotels, restaurants and hospitality establishments. Now, certain manufacturing units are also shut due to LPG shortage, and also waiting period for the domestic LPG refill has been raised from 21 to 25 days. Hoarding, etc. have been really capped. So there is an inflation in price of fuel, which also percolates across several sectors. So these are some of the examples of how the world order has been impacted because of fuel shortage. And remember that we will be taking this particular topic head on and really trying to demystify the overall impact in the big question today at 6, Malika.
Right, Nisha. Thank you so much for all that information. And viewers, as Nisha said, watch the full discussion with an expert panel at 6 p.m. with Nisha. The big question tonight is the world's fuel future at risk? But moving on. Meanwhile, the government, in its regular interministerial briefing, has given a positive update on the LPG supply condition in India. Sujata Sharma, Joint Secretary, Ministry of Petroleum and Natural Gas, said that the LPG situation has improved and domestic consumer supply is normal. Sujata Sharma also clarified that there is a downward trend in panic booking, therefore signaling confidence and improvement. Listen into her remarks on LPG panic buying.
मैं देशवासियों से अपील करना चाहूँगी कि अफवाहों से बचें, घबराएं नहीं, ऑनलाइन बुकिंग करें और एलपीजी सिलेंडर की डिलीवरी उनके घर पर होगी। पैनिक बुकिंग से बचें। आज कल भी लगभग 70 लाख पैनिक बुकिंग रजिस्टर हुई और इसके अलावा मैं ये भी कहना चाहूँगी कि जहाँ पर ऑल्टरनेट फ्यूल्स संभव है, चाहे पीएनजी हो, चाहे इंडक्शन या इलेक्ट्रिक कुकटॉप हो, उसका प्रयोग करें।
Viewers, let's now give you some important updates on the Middle East war. The Middle East conflict is intensifying sharply as the war enters day 18 with fresh strikes, rising casualties and widening geopolitical fault lines. Israel says it has carried out a combined wave of strikes across Tehran, Shiraz and Tabriz, targeting missile sites, command centers and air defense systems. It has also claimed the killing of a senior commander of Iran's Basij volunteer force, marking a significant escalation. Tensions have now spread across the region. The UAE briefly shut its airspace after missile and drone threats, even as a drone strike triggered a fire at an oil facility in Fujairah. The Strait of Hormuz is fast becoming a flashpoint. Iran's parliament speaker has warned that the choke point cannot remain as it was, with nearly all shipping traffic disrupted. Meanwhile, the US embassy in Baghdad has come under drone and rocket fire in what are being linked to Iran-backed militias, signaling a broader regional spillover. On the diplomatic front, Iran's Foreign Minister Saeed Abbas Araghchi has sharply criticized the US, accusing Washington of killing diplomacy and warning against further escalation. He also has said that any claim to the contrary appears geared solely to mislead oil traders and the public. And this was in view of US claiming that Iran and US have been talking. Even as Donald Trump says multiple countries may step in to secure Hormuz, the conflict is clearly expanding militarily, economically, and strategically. But it's time for you to look at an important interview. In fact, amid the ongoing rumors around Benjamin Netanyahu, NDTV travels to Sataf Cafe in Jerusalem, the very spot he visited just days ago. And it's now the center of online speculation. What's really going on? Here's our ground report by my colleague Aditya Rajkol.
NDTV is reporting from the same location where 2 days ago Prime Minister Benjamin Netanyahu had come to in fact have a coffee. There are a lot of speculations and fake news and disinformation going all around about Netanyahu's presence and whether he's alive or assassinated. But this is the cafe, the Sataf Cafe, where he had enjoyed a coffee. You can see these visuals on the screen. If you can pan and show you, this is the entire cafe where Prime Minister had come. This is the entire location. It is a kind of a hilly region in Jerusalem, in Israel, where Prime Minister Netanyahu had come and in fact enjoyed a cup of coffee. The people here are not willing to speak in detail about their encounter with the Prime Minister, but they did confirm that the Prime Minister had come here indeed and enjoyed a coffee. So this is the entire region. People here are coming. There's a lot of normalcy, and you can see this is the board, Sataf Cafe. This is the location. You can see this written here as well. It's a very kind of an exotic hilly location. There is a wild trail around this place also. There were two videos that came out from here. One, Netanyahu enjoying a coffee, and second, he interacting with the IDF personnel and civilians in this entire area. While there is a lot of fake news coming in from Pakistan, from Iran, and some parts of India as well, but the reality remains that Netanyahu is very much alive. He is coordinating the war which is underway with Hezbollah in Lebanon and of course against Iran. It's the day 18 of the war, and NDTV continues to report from down on ground here in Jerusalem. From Israel, this is Aditya Rajkol for NDTV.
US tennis star Sania Mirza has shared her personal account of returning home to Dubai after being caught amid escalating tensions in the region. Speaking exclusively to NDTV, she described the anxiety of leaving a conflict zone and witnessing falling debris. Listen in to this exclusive conversation.
You not long back you were in Dubai in the war zone. Tell us, how was it to get away? What was it that you experienced there?
Well, I came last week, actually last Sunday, and it wasn't, uncertainty is obviously never easy to deal with, but honestly, Dubai is my second home. It's somewhere that my son goes to school at. I spend a lot of time there. So, but we felt, we did see interceptions. We saw, we heard fighter jets above our house. There was something that actually just happened 400, 500 meters from my house where, there was a debris. So there were in Al Barsha, exactly. So there were a few incidents that did take place, which is why I thought at that point it was better to, just kind of come out of that, because you don't want to have a young kid and the questions he was going through, and it would be traumatic for him as well.
Reacting to
he was asking questions, but honestly, we didn't feel like unsafe, but it did feel uncertain. If that makes sense. Yeah, it was unsettling and it was a little anxiety driven, and because you also didn't know what to do.
Viewers, India's auto component industry is facing mounting pressure as supply disruptions, rising costs and logistical bottlenecks begin to bite. Several units have reportedly shut due to shortages of LPG and industrial gases, while raw material prices, insurance and freight costs have dramatically surged. Export routes to Europe via the Red Sea and the Suez Canal are also under strain, extending delivery timelines and adding to uncertainty. My colleague Danish Anand spoke with Vinny Mehta, Director General of ACMA ACMA, on how the industry is coping. Listen into that interview.
So what sort of percentage does the exports to West Asia hold as of now? And if the war is prolonged for, say,
another few weeks or probably few months, what will be the major impact on our sector?
So we'll talk about the exports first. So as I said, we are a very export competitive industry, and last year the component exports stood at close to $23 billion. Of the $23 billion, about $1 billion goes to Middle East, but the bigger exposure is that to Europe, where we export around $7 billion. And as I said, we access Europe through the Red Sea and through the Suez Canal, and those timelines right now and the costs have gone haywire. So both of these are impacting our export. And this year, the current fiscal has been probably the best possible year for the auto industry, both from a vehicle and a component industry's perspective. So this is now sort of a little bit of a question mark on how the future would be, at least the immediate future. But again, I'm hopeful that, it's impacting everybody in the world, and therefore probably all forces would come together to make sure that there is a fast resolution. Yeah.
Viewers, we have a breaking news coming in. Shipping Ministry is talking to Department of Financial Services to set up protection and indemnity insurance for maritime. Let's go across to my colleague Shrimi Chaudhary breaking this news for us. Shrimi, what exactly is this insurance and to what extent can this really help the current crisis?
Yeah, that's right. During the briefing today, what Shipping Ministry representative indicated the fact that they are in talks with Finance Ministry to have its own India club. So what is happening so far is that as far as insurance for maritime goes, we are 90% dependent on the global tonnage. And in fact, all those insurers which are there at this point of time are foreign insurers. So to reduce that dependency, Finance Ministry has been working on this for a very long time. In fact, Finance Minister Nirmala Sitharaman had pointed out, 2-3 years ago, to have such a India club, have a protection and indemnity insurance coverage for maritime, for Indian maritime. So this is coming, of course, at a very crucial time when, they are understanding the situation and how this Iran conflict has emerged. Now, what these coverage will mean to, this will, of course, cover the crew safety, which is, of course, very, very important. We are seeing how many Indians are stranded around the Strait of Hormuz. So that is one. Second is the cargo liabilities. Again, very important point which this coverage provides. Environmental damage, if it's any due to any war or similar sort of situation, and the oil spill risk, if there are any. So these coverage are important, and it's commonly known as India Club. And this is this talk is, of course, in a very initial stage, and what we are picking up from the Finance Ministry side as well, that DFS is going to weigh on this proposal of Shipping Ministry, and it will take a call very soon, because this is kind of the right time in that direction to reduce the dependence, as well as ensuring our carriers and cargo safety and the overall issues which currently the maritime is facing.
Thank you so much for that crucial update. Viewers, this is very important because at this given point in time, a lot is happening through the Strait of Hormuz, and our own Indian players coming into the insurance space and securing our ships is going to really help with trade in that area. But that's all the time we had on this edition of Profit 360. Stay tuned. This is Malika Mishra. Have a very good evening.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. We get a lot of love from our viewers on getting new companies, but remember, in these times when there's a lot of geopolitical tensions and volatility in the small and mid caps, I try to find some value for you, and this is why I've got a new company today in KYC. But before that, let me give you some hints. Try to guess the company. The first one, the company is a co-working space company. 4 या 5 तो अभी list हुए 2-3 साल में. Maybe one of them is there. Second one is that the company listed in May 30th, 2024. It's a recent listing. If you are a long-term investor, and interestingly, the stock has taken a beating, and that's of course for across the sector, be it the small caps and the mid cap. Stock is down 52% in the last 1 year. Kya value emerge ho raha hai? That's the question to be asked. So these are the important, takeaways. But one thing which was very much interesting was last week there was a very big volume based buying seen in the company also. That means the large investors might be lapping up stake in the company. So these are the important takeaways or the hints I would like to give you for the company which is coming in KYC today. And the company is very simple. It's office. Yes, I'm talking about office space solutions. This is what we are talking about. Chennai, Bengaluru, Mumbai, बहुत सारे बिल्डिंग्स में आप देखते होंगे ऑफिस लिखा हुआ है रेड बैकग्राउंड के साथ. दिस इज दैट सेम कंपनी, ऑफिस बट ऑन रेंट, जस्ट टू पुट इट इन सिंप्लीफाइड मैनर. बट व्हाई आर वी कॉलिंग दिस कंपनी ऑफिस स्पेस सॉल्यूशंस? क्यों आ रहा है आज? द बिगेस्ट थिंग इज द GCC explosion in India. What are the key benefits of this industry? Is this insulated from the global clients? That's something which we'll ask for. The growth and expansion plans ahead, especially in the strategy in the tier 2 and tier 3 cities. That is where we are seeing a lot of these office buildings mushrooming. That will be pretty much interesting, and my viewers will agree from these cities as well. High ROCs of 66%. Is this actually sustainable? And is there any calculation or formula when the company is getting an ROC of almost 66%? Very much interesting and debatable as well. Let's talk about the third reason why we are calling this company. It's a high margin growth business. Is this going ahead, an asset light mode? Will that company focus on? That is something we'll ask the management also. And apart from this, the growth explosion, the key pipeline numbers, कितना million square feet का धंधा आने वाला है 2 से 3 साल में? That's the big question. We will be asking the management on that, and of course on the show would be the management here. But let's give in about the company details. Company करती क्या है? We know that it gives offices for rent, but is that the only business which they have or something more? Yes, definitely it's a co-working space company. And let's look at the other key details about office space solution, recently listed. We had mentioned about that, but little bit more about it. और क्या businesses है? And definitely it's in the flexi workspace also. That means design and build business is also there. But remember, there's a slump sale happening of that business, and there's an extension happening. It will be done by 2026 end. Apart from that, 62% of the signed supply is under management aggregation model, यानी कि ownership पे नहीं रहता है, asset light it is. So that means it helps get you the ROC numbers which we spoke about. They have a pipeline of 8 lakh square feet across prime micro markets. This of course includes tier 1, tier 2 and tier 3. 80 plus unique GCC client bases there. GCC is very much important, global capability centers. That is where the street is looking for alpha here. Almost 21% of the rental revenue share is coming from this segment, and this is very much important. We'll discuss that in detail with the management. 36% of cohorts is 500 plus seats category. That's a very much important. That means there are large clients also involved. Roughly 10 new centers they have added recently and expanded the network to almost 257 centers. That is big, and in terms of market share also, it's one of the leading players in India. 177,000 seats across 18 cities, and of course the span is increasing. The way GCC explosion is coming in India, there's a diversified client base of around 3,400 customers as well. That's the Q3 operational update I'm talking about, and you could say the 9-month numbers as well. The multi-center clients, they account for 46% of the client base. And apart from these operational numbers, there's an interesting take on the blended occupancy. That's roughly 75%. In the current market macro scenario, this is good. So it's something to watch out for. And there's a slight increase in this occupancy levels as well. But client kaun hai? That is important. Enterprise and MNCs, generally when you have larger clients like that, इनके लीजिंग पीरियड ज़्यादा होते हैं, एस्केलेशन ज़्यादा होता है. दैट मीन्स दिस शोज स्ट्रेंथ इन द बिजनेस मॉडल. Apart from that, 25% is SMEs and mid corporates, startups and others. This is where a little bit of churn can happen as seasonality comes in, and at times they become bigger. They might require bigger places. So this client generally becomes the enterprise client also. Also, apart from the client distribution, let's focus on the key triggers for this company. इसमें company में आगे में क्या है? The sustained office leasing momentum, that is where the company is very bullish on. The street is also very bullish on this segment. Now the growing enterprise preferences for flexible workspace solution, that augurs well also, and it's asset light for the company perspective as well. Now there is a continued expansion happening for the GCCs, and that is one of the main reasons why we are calling office space solutions to KYC, and we'll try to decode that entire growth story. There's this new supply coming in, the grade A minus assets, and that is where the company is focusing on. When a company in the co-working space focuses on these grade A properties, your client, your yields will be always on the higher side. Now, what is India's GCC growth story? ये है क्या चीज़? This is very much important. Of course, this is the estimation we have taken in FY30. In FY23, the GCs were almost 1580. That's expected to go up by almost 40-50% to 2200 by FY30. The annual revenue coming in from the GCC was $46 billion, expected to more than double to $100 billion by FY30, and we just have 3 years left. So definitely the GCC story is very big when it comes to India. But let's get back to the show. KYC ratings क्या है? There are 8 rating parameters where we get in a company to judge in KYC. This of course includes the income statement, balance sheet, cash flow. These are the holy grail for financials, but if you look at the return ratios, that's also very much important. And in this case, we will be understanding the return on capital employed as well. Shareholding, how much things have moved, but remember, it's a very small history just because it was listed in 2024. And street cred, kitna paisa bana, especially from the IPO price, we need to check, does the money has been made or not in the company as well. Valuations, we get in their peers to see where does the company stand. Remember, there is a good correction from the top from there, and the outlook on the industry and the company perspective, how different it is. This is the entire rating parameters where we'll judge office space solutions in KYC. The first one is the income statement. Largely, the growth has been really strong. You must be wondering, in the hyper expansions phase, of course, the profitability or the path to profitability, that's the big question which comes in. But now the company has turned profitable and the growth is coming in all the sides, be it top line and even the operational numbers. If you look at the Q3 numbers also, surprisingly, the numbers have been on the stronger side. Just have a look at that. EBITDA jump is there. Margins overall is 36%. The ROC numbers is 66%. And even net profit is gradually going up. So that means there is the stickiness of the clients also, and the way they are going for the business model is very much interesting. There is industry tailwinds and the company is trying new things as well, especially on the new margin front. And we have barely scratched the surface, to be honest, if you are studying this space. So income statement, it's a strong thumbs up when it comes to office space solutions. So let's talk about the balance sheet, how things have moved. Of course, when company is expanding, there will be higher borrowings, and that is needed in any aspect of the business. But the way you manage the balance sheet, that's very much important. That's the CFO's and the finance team's job. The book value is decent. Let's just put out the borrowings and the cash balances to see how the picture has moved. And this is where the borrowing we talk about. Of course, this doesn't exclude the lease liabilities. That also comes in. So lease liabilities bhi aate hain isme. That's why you're seeing this figure on the balloon side. But nevertheless, 82 crore rupees is there as a cash and bank balance also. This definitely helps when it comes to the overall working capital ratio. So balance sheet is still neutral right now, going ahead for office space. But cash flows, that's also very much important in this business. Largely the rentals are paid on time. There isn't much to talk about in terms of receivables. The cash flow from operations, that has significantly gone up, 363 odd crore rupees. PAT has turned positive. Net cash flows are also up. Of course, a little bit of investing would be there in their expansion plans, but the way they operate, that is on the asset light side. That is where the company is focusing. So you expect the cash flow metrics to remain stable or even improve going ahead. So because of that, cash flow, I have given a strong thumbs up for office space solutions. But let's talk about return ratios, and this is a very interesting take. Of course, let's remove FY22. There's a lot of aberrations there, but from FY23 there has been a stable increase in the ROC numbers, and even from here 62% has gone up to 66%. The question is it sustainable? And if yes, can this go up to the 70% mark? And overall, right now the ROC numbers are looking really strong. And this is the 9-month FY26 number that I'm talking about. So it's a strong thumbs up when it comes to the overall return ratios. But let's talk about the shareholding, how things have panned out. And remember, the company has a lot of private equity investment as well. The FIs we see, that's around 19%. But in this period of almost 9 months, they have increased their stake to 27%. Promoter holding is not so much, and they have actually sold a bit, it's around 17 odd %. But nevertheless, the institutional participation is very strong. DI also has increased their stake from 34% to 40%. But public, on the other hand, that float has come down. So definitely the hands are very strong who are holding the FIs and the DIs. But on the other hand, promoters are reducing the stake. So that kind of, negates, what a positive view I had for the company. But net, it's still neutral when it comes to the shareholding patterns. But shareholding के बाद आता है street cred. कितना पैसा बना? Be it 1 month, 6 months, or even from the IPO. Remember, the IPO was in the end of 2024, and the concern is the year to date it's down 45%, 1 year is down 52%. 6 months from the IPO price, there hasn't been any money made in the stock. If you're a long-term investor, and even a medium-term investor on positional basis, nothing has been made. Remember, the small cap, mid caps have taken a big beating, and its peers have also lost a lot of market cap and share as well. But net street cred is negative for office space solutions. Let's talk about the valuations, and there are important companies also to talk about. In my analysis, I've taken the 12-month forward PE ratio. A lot of companies were having issues on path to profitability, but some companies have come to the path to profitability. Especially I'm talking about SmartWork and IndiCube. The valuations are still on the higher side. Only one company is there which is cheaper than this company, and that is EFCI. That's around 7 times only of 12-month forward PE ratio. But Office on the other hand is still cheap. It's almost 15 times. From its peak levels, it's down to almost 50%. So big correction in the entire industry, and maybe the market is looking for some value buying. So the valuations actually for at least EFCI and Office is very strong, and there is some smart money lapping up as well in these stocks. So it's a strong thumbs up when it comes to the valuation front as well. But let's talk about the outlook. This is a key beneficiary, of course, of the GCC expansion. Time and again, this is the most important word when you align this company in your analysis. The sustained demand happening across the key clients. Look in your city, maybe you'll find these buildings as well. Also, there's a pipeline of 8 lakh square feet, and that is where the bullishness comes in from the management. They mentioned that in the third quarter as well, and 100% of the new supply is coming in the grade A or grade A minus assets. That is showing strength as well. Apart from this, almost 4 lakh square feet of confirmed pipeline is there, and this is coming in the prime macro markets. And lastly, if you look at the outlook, importantly, the move towards elite and gold centers, they are capturing the GCC demand. These are on the high margin side with a lot of cross-selling of other values and products as well. So all cylinders are actually firing for this company. Of course, the macro conditions, the market conditions are not favoring the small caps and mid caps, but it's my duty to find for you value as well. So it's a very positive outlook when it comes to office space solutions. But let's give you the entire picture of the KYC rating for office space solutions. What's the total rating all about? The revenue that has done really well, cash flow management and the return ratios have been strong. And if you go into the details about it, shareholding still needs to, see how much movement happens, especially between FIs and DIs. It's already overloaded. Street cred, there's the market conditions, and of course, we have seen that, the stock hasn't given positive returns at all. Even from IPO price, it's down more than 20%. Valuations are very attractive because of this. And outlook, especially the GCC explosion, no matter what happens, is definitely very bullish, and a lot of reports are suggesting that. So total KYC rating on the higher side of my averages is 6 out of 8 for office space solution. And to decode this, of course, we will be joined in by Amit Ramani. He's the chairman and MD at Office Space, but there are some interesting snippets about him. He has been at this position from May 2015, a decade of managerial experience for Office. But apart from that, 2 decades he has spent in the real estate, especially on the commercial part. Leadership positions in Nelson India and Bank of America is something which Amit has been a part of, and education coming in from Cornell University, USA as well. And to decode more about the industry and of course the GCC explosion, we are joined in by Amit Ramani. Good afternoon, Amit. It's always a pleasure to talk with you. Amit, just to start with, the GCC explosion in India has been really strong, and maybe it is, it's not impacted by the global macro concerns which are happening. How are you taking this? And if you could just explain us the industry perspective, how things are moving ahead, especially in the GCC front.
So clearly, I think there is a move towards GCCs as we have seen in the last, year or so. I think whatever happened in the first 20 years from early 2000s till about 2024 is going to happen in the next 3, right? So, the amount of GCCs that we see today will double in size. Every year, we are adding about 20, every quarter, we are adding about 25 new GCCs that are coming to India. These are first-time GCCs. So about 100 of these are being added. Plus, in addition, the existing GCCs are doubling down on India. So whatever, growth that we see in the industry, the overall industry in terms of next 3 to 4 years, the GCCs would have 160 to about 180 million square feet being added. And 50% of that is going to be handled by Flex. So because of the GCC growth, the Flex industry is also going to be on a very, very strong footing. We anticipated that we would be about a $5 billion industry. Now the focus is, obviously the reports are saying that this would be close to about a $10 billion industry by 2030. So $10 billion industry, we are talking about the GCC segment. But
just to get into more details about it, how much is the market actually growing each year, and how much is the company growing by each year? And if yes, we could just come at the market share also.
Sure. So last year, if you look at the data, about 80 million square feet of gross leasing happened. About 20% of 16 million was flex, right? So today we have stabilized somewhere in the 20 to 25% per quarter range. And that's where we see the growth. The industry today is touching about 100 million square feet. And by 2030, this would be closer to about 150 million square feet. We today are operating about roughly 9 odd million square feet. So you can do the math, about roughly 10% of the industry. We are part of 10% of that industry today.
Fair enough. And just looking at how the development has happened, a lot of unorganized players are also coming in. I remember very early in smaller cities which I travel, I see your building also. There's a red logo of office as well. I was in Chennai, I was in Hyderabad, even in Surat. I had seen these names, but other smaller players are also coming up, and maybe a little bit of competition might be coming up. But then how do you differentiate office space solutions अलग कैसे है बाकी लोग से? So I just wanted to know that.
See, the reality is because the industry took off really well post-COVID, a lot of players jumped into it. It's like the developer, right? If you go on Noida Expressway, there are 500 developers, but how many brands do you know, right? I mean, very few. So I think just like any other brand today, proud to say that the top 5 or 6 players today command 60% plus market share, right? So I think that clearly says that there is a flight to quality. There's a flight to a brand that can deliver that quality. Not just the infrastructure, but also the kind of services that we deliver, also the kind of experiences that we do for our customers. So from our standpoint, I think a few key differentiators, right? One is kind of the services that we deliver. We are consistently able to deliver that across 250 plus locations. Second is the network. If it's everywhere, and I'm glad that you noticed our logo in many, many cities, and clearly if you're there everywhere, then the utilization will happen. And if it's consistent across all the locations, then you will trust that brand and you will go for it. Today, 3,400 client companies across India call us their home, right? I mean, and today in our mobility business, which is our just-in-time user meeting rooms and office space, we today have another 3,000 odd companies. Total 11,000 companies matter in India, and almost 65% of those companies recognize us as their workplace solution provider. Also, we do design and build services. I think that then clearly allows us to swim across different requirements that our clients have. If they require co-working, if they require managed office, if they require a flagship product in office or a gold or an elite. So all the tiering also happens. If they only want to have a conventional space, we can do design and build services. We can provide transportation solution, food and beverage, cafeteria services. So it's a platform today that consistently can deliver.
Amit, just as a thought, and an MBA student also wrote to me that since you are already controlling, or you could say that you have a good presence in the office space, and any service which is there, it can be quantified. And if it's quantified, that means there can be a business opportunity. So any ancillary business, Amit, you're looking for expanding, or any kind of inorganic acquisition, which will of course be in this office economy as well, just to put it in perspective. If yes, sure, how's the outlook looking like for that?
So as I said, I mean, we are a platform approach, right? So today, anything that a user requires from a workplace perspective, we will be able to deliver, right? Clearly, we are market leaders in co-working and managed office. We also added design and build services. We also have our furniture brand Frame, which we have recently launched. We do Office Cafe, which is our food and beverage services. We do IT solutions under Office Tech Labs. We do transportation in partnership with Ecos Mobility. So everything that a user requires is available under one umbrella, and the ancillary services are clearly something that we are developing. In terms of inorganic growth, we don't have any such plans right now.
So there must be organic growth and cross-selling, and of course these services are on the higher margin side, especially with the larger tick size of your customers. A very interesting phase on that. But the number which is very much important, and it's striking my eyes, the ROC numbers. Of course there are some adjustments also. It's a 66% ROC. And of course, it's giving the figure or a vibe that it's an asset-light model, is something which you are looking forward to. What is the sustainable ROC in the industry, and your ROC is so high? What's the reason for that?
So clearly our supply acquisition, we have spoken about this in the past also, is done what we call through managed aggregation, where the landlord is a partner to us, right? Essentially, they are profit share partners. Majority of the investment in the new investment towards the capital is done by the landlord, typically about 70 to 80%. Rest of it is done by us. And hence the return on capital is really, really high, right? Because the investment is coming primarily from the landlord, and hence our return on capital is high. It is almost double or triple the size of the industry today, and we will continue to maintain that. Even if you look at our managed aggregation and our straight lease portfolio, it is 62% is managed aggregation, about 38% is straight lease, and we will continue to maintain that. Our pipeline in that area, I think you mentioned it earlier as well, the pipeline is very, very strong, rather almost 11,000 seats that are under fit out or LOI. In addition to the ones that are live. So we look at about total of 166,000 seats, of which 62% of the portfolio is going to be in managed aggregation. Hence, we feel they'll continue to be in that higher range.
Right.
Also, as the occupancy increases, this ROC ratio will also improve further.
Okay, so we can expect something around 70% in the coming quarters. But Amit, one final question. The tier 2, tier 3 expansion, the Bharat expansion for the global capability centers, that's a very important trend to look at. Which are the cities or geographies you are trying to, make inroads into?
So we are currently in 18 cities. We are currently evaluating Vijayawada and Visakhapatnam. We are currently in Indore, in Ahmedabad, in Bhubaneswar, in Jaipur, in Nagpur, and so on. So from our standpoint, we will continue to maintain these 19 cities. Tier 3, the challenge is the availability of infrastructure, the consistent supply, that is a compliant supply, that is not available in tier 3. So tier 2 cities, obviously there is compliant supply available, and the GCC growth or the Bharat growth will happen in these tier 2 cities. We feel the 4 to 10 trillion economy is going to be built on these new cities.
That's a very important take, and you are an important cog in the wheel, especially in the office space. Thanks a lot, Amit, for taking out the time and giving a lot of clarity on the growth prospects of the company and, of course, India's GCC explosion story. So, this is the management, very bullish on the GCC story in India. And interestingly, the growth is coming in Bharat, the tier 2. That's where the alpha is lying. So that's the management of Office Space Solution. And for more interesting companies like that, stay tuned to KYC and keep watching NDTV Profit.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything personal finance related, and quite a few times we end up talking about taxes. Now, there are quite a few changes that are coming about in the new Income Tax Act. As you know, this is something that went through Parliament, and it is primarily an attempt by the government to simplify the tax rules that some had argued, running up to where we stand right now, were a little outdated. There are quite a few operational changes that will change the way that you transact in certain cases, and in the form of your reporting, there will be changes that come about as well. So first, to lay the context, let's go to my colleague Mahima Vachajani, who is going to lay things out, and then we'll speak about it in more detail. Mahima, what are the key details that you picked up?
Right, so various changes happening in the new Income Tax Act, which will be applicable from 1st of April. I'll start with your PAN card usages first. Earlier, the cash deposit and withdrawal, any kind of withdrawal that you make for transactions for more than 50,000 PAN card was required. Now this limit is lifted to 10 lakh rupees. For any transaction that you make for immovable property, the earlier limit was 10 lakh rupees, which has now been raised to 20 lakh rupees. For buying of motor vehicles, earlier all vehicles required a mandatory PAN card submission, but now it is more than 5 lakh rupees. For hotel and bill restaurants, the earlier limit was 50,000 to submit your PAN card. More than 50,000 transactions, of course, which has now been lifted to more than 1 lakh rupees. For insurance policy, it's slightly reverse of the earlier mentioned transaction, because earlier it was linked to your premium amounts. More than 50,000 was the earlier threshold. Now, mandatory for onboarding all account-based relationships will require PAN card submission. For credit card, certain rules are also changing, because this will impact the way, income tax will be monitoring your credit card spends. Any spend made up for 10 lakh or more, there will be, and this is non-cash, and up to 1 lakh rupees or more than 1 lakh rupees in cash must be reported to the IT department in your ITR. PAN will now be compulsory for application of all credit cards and personal spends on company cards. So if you do any spends using your company credit card, there has to be a proper evidence maintained for that. Otherwise, it will be charged as tax in the hands of the user. As employ perquisites. Now, lastly, in terms of ITR due date changes, for your ITR, of course, 31st August, your deadline to submit ITR 3 and 4 has been extended to 31st August instead of 31st July earlier. For revised return, the due date has been extended to 31st of March instead of 31st of December. Buybacks, the amount received will be now taxed as capital gains from 1st of April. TCS rate will be applicable. Different TCS rate changes have happened. For alcoholic drinks has been increased from 1% to 2%. For overall, TCS rates for overseas tour packages, education as well as medical treatment via LRS, the overall effective tax rate has been now been given at that flat 2%. And lastly, the STT hike that was the most discussed part of the budget. Futures, STT on futures will be taxed at 0.05% from 0.02% earlier, and for option it is raised to 0.15%, was that of 0.1% earlier. So this is the overall tax changes that you can expect from 1st April going forward.
All right, thanks so much, Mahima, for that. Now let's talk about some of these aspects. I'm joined today by Archit Gupta, the founder and chief executive officer of ClearTax. Archit, thanks so much for taking the time. Let me, at the onset, before we get into some of the key details that I want to discuss with you, ask you about your overarching thought about the new Income Tax Act from your perspective as well, as a professional and as a chartered accountant and somebody who looks at tax very differently from the average person. Has it really made life easier?
So one minor correction, everybody always assumes I'm a chartered accountant. I'm not.
I mean, you are the founder and chief executive officer of ClearTax. But having said that, okay, I'm pretty sure that your team has studied this. So operationally, what changes?
Yeah, so I think it's a great question, and let's force a little bit of a step back. That what is the government doing and how does this simplification come about? The big thing is that the government now has trust on its data and systems to simplify the income tax code. And that's the big thing, like that we have trust on our digital data systems of the IT department and trust in the various kinds of reportings now that we demand real time from your bank, from your credit card company, from your broker, from the exchanges, from the mutual fund depositories, from pretty much like the foreign transactions that you do, the foreign travel that you do, some of the reportings from international governments and data exchanges that the government has. The government has trust on its data and AI systems where it believes it can gather the real-time data about you and then make simplification in the Income Tax Act, make certain simplification and still collect the appropriate amount of taxes from its citizens. So that's the big our underlying thesis and the underlying sort of bedrock foundation on which all this simplification is coming about. So that's number one. Number two is the financialization of India continues. So our data at ClearTax suggests that the number of people dabbling in the public equity markets or investing or doing more trades, that's gone up dramatically since COVID, but that trend continues. Even last year, despite all the changes, we've had 20% growth in the demat accounts of the country. Commodities trading with gold, silver at all-time high went up quite a bit in the country. The data is very clear on that. So overall, the financialization, the participation in equity markets is much more and much deeper. So overall, the reporting burden of professionals and white-collar workers has gone up quite a bit by macro factors rather than micro factors, is my view.
Archit, just a follow-up to that. It seems like the government has sent out a lot of notices based on data that is collected the way that you're saying that it has, right? And you've described that very well. The bedrock has changed. So what are the irregularities that have so far been highlighted that has stood out to you?
Yeah, so I would break the question down into two parts. The first part is actually very interesting, where the government has called their system a nudge-based system, where they are still saying that, look, we are nudging, we are going to trust like our data, but we are also going to trust your partnership as a taxpayer a bit so that we can find a meet in the middle. But it's very fascinating that there are two big pillars of dramatically increased tax collections, which was published in the economic survey. One is HRA declarations. Over there, the government has collected north of 200 crores of new taxes from taxpayers through this nudge system. So the nudge system and the data systems have probably paid for themselves already. And then another 100 crores for donations to political parties under Section 80, which has I believe, 100% exemption, if I recall correctly. So with these two, the government has published clear data to the country that the nudge system is working.
Oh, excellent. Yeah, that latter is something that a lot of people utilize, and the contention really is that in certain cases, this is not really appropriate. Political parties that exist only on paper and that don't really contest elections have been found to be utilized. But let's talk about a few of these operational changes, and quite a few of them, Archit, have to do with the PAN, right? And the monitoring of the PAN, where you have to utilize your PAN. Now, this was common for certain cash transactions, certain cash deposits in the bank, a purchase of a vehicle. But a few of those things have gotten clarified now with the new act that comes into force on the 1st of April, right?
Right. So for the biggest purposes is that the government wants clean data on when you are doing high value or high risk transactions. And they have had historical data where they have identified what are high risk typical transactions, what are high value transactions, which they need clear reporting. In fact, their trust on their data systems has gone up. So some of the reporting is actually simplified, simplified, and the limits have been taken up, in fact, not taken down. So the government is asking for less data from banks and fiduciaries like insurance and so on and so forth on the PAN, because they now have trust that these transactions of only high value is what they need. So from a 50,000 cash reporting, I think now they've moved to a 10 lakh aggregate. So they're signaling their risk parameters to the taxpayer that, look, these are the situations where risk emerges. These are the situations where high value and high risk emerges. So it's the government is trying to now move towards more aggregate reporting from banks, exchanges, insurers, and other situations of risk identification. So that's an example of where PAN reporting is evolving.
I do want to ask about the changes with respect to credit cards, and this stood out as interesting to me because I've seen and I've spoken to tax professional chartered accountants who've said that your credit card transactions, both domestically and internationally, are monitored. So if there are mismatches with the way that you're spending and the amount of tax that you're paying, then there is a possibility that you are going to get a query from the tax department. Now, specifically annual spends of 10 lakh rupees with credit cards, this now has to be reported to the IT department. So first, what does this entail? How are you going to report this? And why is this significant for the tax department to know?
Yeah. So breaking it down, my sense from the notification is that the reporting is being done at the credit card provider level, at the financial institution level, not at the individual level. So the taxpayer though has to be very careful, right? Like 10 lakhs is a limit. They've signaled that this is where risk starts to emerge on the spend. Second is, I think, 1 lakh rupees of cash. So I think cash is being seen with a finer tooth lens, if you will. And then building upon two major elements one is now on new credit card applications, the IT department has mandated PAN as a necessity. And second, if you're using your credit card for business expenses, I think there's some evolution that the department has asked for separation of concerns, because they want to tag what is a perquisite and you're spending on, let's say, having fun, and that's not really a business expense, but this was a gray area where the government really takes the perquisite tax very seriously, because that's a source of leakage for high value taxpayers, right? Perquisites are a very sensitive topic. Everything government simplifies and taxes on perquisite. So credit card was that one area where they seem to be tightening even deeper, even further. So overall, like these two, I think, are further evolution on the credit card side. So if you have high volume of high value of credit card transactions, you are under a spanner of the government AI, which will look at your transaction.
I think the other big change, of course, is in the way that returns are filed, right? In ITR 3 and 4, as I understand it, Archit, this has to do with professionals, and
auditing requirements come into play and all of that, right? So why is it significant that they've shifted the due dates?
Right. This is a very important point. Overall, at ClearTax, our data suggests a very rapid rise in the number of ITR2, ITR3 taxpayers in the country. The number of businesses is largely stable. The number of businesses which are transacting year on year, if you look at the data, that's largely stable. The number of traders and future and options and all those things has exploded, right? So overall, the government realizes that you need to give businesses and these individuals time to revise their tax returns in case they've made a mistake, because there's a penalty of 5,000 rupees the day the deadline ends. So the 5,000 rupees is a very strong incentive or disincentive to do the filing on time. Now, if you've made a mistake, earlier there was a very small window, and that window created a lot of pressure, and you would end up reporting something and then you get a notice. So the government realized a relaxation is what will get more accurate data from the taxpayers, and perhaps they're going to lean in on the nudge system more, so that they potentially provide the nudges before the financial year ends, and you have time to revise. So it's being seen as like, okay, we will treat the citizen as a partner, taxpayer as a partner, instead of a guilty party and a criminal. So it's a partnership model, in my view.
Yeah, that seems to be the case, and I think it follows what the finance minister has said repeatedly over the last 3 to 4 years, in particular, to try and facilitate ease of doing business and ease of paying tax and all of those points. Archit, thanks so much for taking the time and for explaining this, because it's one thing to list these things out, but it's another to try and understand what the thinking is and how to really ensure that you're conforming with the rules. Thanks so much for taking the time.
Thank you so much.
All right, now, watch out for your credit card spends. And on that note, we're going to speak about a type of credit card, and we do this often on this program because quite a few of you are using this strategically. And bear in mind that it's important for you to look at your credit card as a strategic spend and not something that you do just because you want to rack up your credit score or whatever else, right? So Ivor Soanes, editor at special features at NDTV Profit, joining in to have a conversation with me about UPI credit cards. Ivor, thanks so much for taking the time, and always a pleasure speaking with you. But let me ask you first, what is a UPI credit card? Of course, the UPI is the Unified Payment Interface, which is what you use with your GPay, with your Paytm, with various other service providers, including your bank. And this is something that runs on the IMPS. But how are you putting UPI and credit cards in the same sentence?
Well, Alex, great to be here. And usual talk about credit cards. Now, exactly like you said, don't use credit cards for anything beyond your normal spends. And that's exactly what UPI credit cards are about, right? All of us, India is among the most digitally savvy nations today when it comes to payments. And all of us are using UPI for a wide variety of things, from transport to paying for some fruits or veggies, etc. So, as part of your regular spends, if you're doing UPI, how about using a credit card to do so and get some rewards? So it's as simple as that. Now, you mentioned some apps like GPay, etc. Now, there are a lot of apps really that have been started by fintechs, and many of them have launched credit cards too. I'm talking about apps like Kiwi, Super Money, Slice, and so on and so forth.
Okay, that's interesting. So how does this work, and what is the advantage, Ivor?
Okay, it's quite simple. The key to all of this is any UPI credit card that you get. Now, there are many of them, and I'm sure we'll discuss that in a minute. You just need to use that app. You need to, of course, initially you just need to set up your card on the app. It's as simple as UPI. Just put in your phone number and the card gets added thanks to NCPI. And once you do that, when you see a QR code, scan it. If there's an option of credit card, and most merchants would have enabled credit cards, some don't, you can pay by credit card and get some extra rewards ranging from 1% to about 5% or more.
Interesting. Okay, so let's spell this out, because I want to make sure, Ivor, that I'm understanding exactly what you're talking about, right? So when you go to, say, buy biscuits at a store, all right, so you have two types of machines. You have a credit card POS machine, in which you have to utilize either a tap function, or you have to insert with the chip and you punch in your PIN. What you're saying is that you can use a QR code, which is usually alongside that, and the Bharat QR is now available everywhere. You can use this application, which is now paired with a UPI credit card, and you can scan this Bharat QR to pay through that application, and it gets deducted from your credit card available limit. Is that how it works?
Yes. Absolutely, Alex. Just the QR code. No need to scan. In fact, some of these credit cards are virtual credit cards. There are no physical credit cards. Like Kiwi, for instance, which I consider the best one. It's only virtual. So you just scan the QR code, and that's what your payment is done. It uses the UPI interface. These are RuPay credit cards. These are not MasterCard or Visa credit cards. These are RuPay credit cards, and they come with their own benefits too. RuPay, for instance, has great lounge access. In fact, RuPay has its own dedicated lounges at Delhi airport, which is perhaps the best lounge at Delhi, because unlike other credit card lounges which are chock-a-block and crowded, the RuPay lounge is never too crowded.
Okay, so this is very interesting, because you made it clear that the MasterCard, Visa, Amex, etc. are not the ones that are providing this. This is RuPay credit card. So first of all, Ivor, I don't think we've had a conversation about this in the past, but when you look at credit cards, you look at the manufacturer of the card, and you look at the merchant as well. It's important to look at that, right? Because it's not necessary that you will find every POS machine that services your card. For example, an Amex will have several areas where it's not serviced. This is because there are merchants that don't take Amex. Can you explain the difference between a merchant, in this case I'm talking about MasterCard, Visa, Amex and RuPay, and an ICICI, Axis Bank, Yes Bank in this case?
Well, Alex, see, that's the entire thing, right? What is UPI really all about, right? UPI is, anywhere you go, you can just scan and pay. Whether it's you're doing it at a panwala, at a vegetable vendor, whether you're buying gold, whether you're, at a movie theater, paying at a restaurant, and that is exactly what RuPay credit cards. There is no need for any POS machine, okay? Just that the QR code that's printed on that card. Just scan it, and if credit cards are enabled, and most of them are, you can pay using credit cards. Sometimes, of course, you can also scan the QR code on the POS machine, but it's using the entire massive UPI ecosystem out there. And this has got nothing to do with POS machines, which are very, very limited. POS machines, are in traditional shops, groceries, and you won't even find them in small places, right? Mostly in restaurants or in slightly larger shops. I'm talking about these QR codes that are everywhere. Billions of QR codes across India.
Absolutely. Well put. All right. So therefore, since we're talking about, let's first talk about the various cards that are available, and let's look at it. Ultimately, this is ease of access and ease of transacting that is most important from what I'm getting, Ivor, from what this card is offering. You can go to the length and breadth of the country. Everywhere you see a Bharat QR, you'll be able to use your credit card to transact. Not something that every other card offers you. And so therefore, convenience is something that you might have to pay for in some way or the other. In this case, you might have to pay for it in the way of less rewards or other things. Is that how it works?
Not really, Alex. Some of these cards actually pay pretty well. Now, of course, they're not like the premium cards, wherein the rewards are uncapped. They are capped, but they give up to 5%. And, I've made about 7,500 last year on one RuPay card. That's not bad.
Okay, so let's run through the list and talk about which offers what and what, according to you, ranks at the top, right? So I think you said that Kiwi is the top option, and this is the application, right? So Kiwi, which is Yes Bank and AU Bank. Is that how it works?
Yeah, so basically Kiwi, so as I told you, most of these RuPay credit cards are offered by fintechs, right? And they partner with banks. So Kiwi has two offerings. They initially started out, in fact, with Axis Bank, but that is closed now. Then they did it with Yes Bank. Now they offer you credit cards either from Yes Bank or from AU Bank. They are the bank behind the card, but Kiwi is the fintech and they give you the rewards.
Interesting. Okay, so you have rewards that are capped at 1% of credit limit, and you have certain other advantages as well. They're seemingly milestone-based rewards with lounge access, etc. HDFC, SBI, Tata New Infinity is the second one that you've listed. What stands out here?
Well, so just to go back to Kiwi for a minute, I think Kiwi, the incredible part is you can get anywhere from 2% to 5% based on milestones. So it's actually pretty fantastic. And that is for a paid version. They have a program called Neon, but there is a lifetime free version that gives you 1.5% flat cashback on UPI scan and pay. So that's fantastic. But now coming to HDFC or the SBI Tata New Infinity. Now again, Tata New is a Tata digital app, as you'd be aware. It's a great app for the Tata ecosystem, but also because it's RuPay, it's a great app for UPI scan and pay too. Now, as I said before, you've got to use the app. Now you can of course load your Tata New Infinity or a credit card onto GPay and pay using that, but you're not going to get any rewards. So you've got to use the Tata New app to pay UPI scan and pay via that. Just like for Kiwi, you got to use the Kiwi app. Now with Tata New Infinity, you can make up to 1.5% back on UPI scan and pay. It's not direct cashback, but you get them in the form of new coins, which are redeemed on the Tata ecosystem and are worth ₹1 rupee for every new coin. And again, even they also offer you some airport lounge access based on spends.
Okay, all right. There are a couple more cards to talk about. One is the BOB Federal Scapia. What stands out there?
Well, remember we spoke about Scapia last time when it came to travel cards. Now, Scapia has a very interesting angle. Scapia is, in fact, is a Visa card. But what they do is they also offer you one additional free RuPay card. Okay, it's completely free and you can use it for UPI. So they give you back about 1% and it can add to your Scapia milestones towards travel. Right. So, but of course, the only thing here is everything is redeemed within the Scapia ecosystem. So it's just an extra card you get from Scapia. Use it for UPI scan and pay.
Got it. And the last one is Axis Super Money. What stands out here?
Well, Axis Super Money is severely devalued now. But if you're a very low spender on UPI, if you're just doing some very small spends, then you can use it. You get up to 3% back, up to ₹100. It's tiny spends. There are some other cards also. There's an HSBC RuPay, which also gives you something similar, up to ₹400 in a month. Those are meant for extremely low spenders on UPI. You just want to, for anything and everything where you're spending on UPI, you can use that.
Okay, so it's interesting. So these cards hypothetically can be used for your daily transactions. You can actually go to the fruit wala and make your purchases in the grocery, etc. And you can have a separate card that racks up more points for your tech spends or your higher value transactions or your travel, etc., which we've discussed. So thanks so much for laying that out for us and for joining us today.
Absolutely, Alex. Use it for maximizing. That's what it's all about.
All right. On that note, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. This is NDTV Profit.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company.
We're going to have this interesting conversation with Biocon on this and more after securing US FDA approval for liraglutide, strengthening its complex drug portfolio and entry into high-growth obesity and diabetes therapies. Let's go across to Siddharth Mittal, CEO and MD of Biocon, on more on this. Mr. Mittal, thank you so much for joining us this morning. Great to have you on. Let me start with the liraglutide clearance and with a bit of an overview. When you compare current products, and there seem to be a fair glut of them in the diabetes/obesity management space, how does liraglutide really stack up?
So, if you really look at liraglutide, was an earlier generation diabetes and weight loss product which was launched by Novo. It was a very successful launch where the global sales of this product at its peak was roughly $5 billion. But over a period of time, of course, Novo had, as a part of their product lifecycle management, semaglutide, which was basically Ozempic and Wegovy, which was launched globally. And again, at its peak, Novo had reached $45 billion in sales. And then there's Mounjaro, which was launched by Lilly. And if you look at today, globally, all the patients are taking these two drugs. Of course, Ozempic is going off patent in many markets this month. And we will see a huge market opportunity in terms of expanded access to patients worldwide. And I think that's what, all eyes are on semaglutide. But if just to wrap up your question on liraglutide, today it's a much smaller opportunity compared to what it used to be. It's less than $1 billion in sales. And Biocon has secured approval for both weight loss as well as diabetes in the US, in the UK and Europe. And we are very excited. I think that just talks about our scientific capabilities. We are a vertically integrated company. So we do our own drug substance, drug product and devices. And I think that's what will set the base for us as we bring more and more such drugs to our patients worldwide.
What is the revenue potential you see from all of these clearances, Mr. Mittal?
I think, see, we are already selling this product in select European markets. We are launching in more European markets. We are going to launch the drug in US soon and many other parts of the world where we are securing or our partners are going to secure approvals. And I think this definitely has a potential to reach 100 million in sales for a generic drug. That's quite a substantial number. And we still see limited competition in most parts of the world for liraglutide.
Mr. Mittal, not just liraglutide, but the entire GLP-1 space, there have been instances in the very recent past of price slashes in certain other geographies. So the question is, when the number of players that get into this space rise, and we're not talking about the next 4 to 5 months, we're talking about the next 4 or 5 years, there will eventually be a commoditization of this, and one would worry, therefore, on the long-term revenue potential. So is that something that you've considered, and what are your thoughts on that?
Sure. I think that's a very interesting perspective. And will we see this same trend across the globe? I'm not sure. I think this will be a little bit more India specific. India, of course, has so many generic companies and everybody has capabilities. Every company has done development and clinical trials. And I definitely expect a huge price war and competitive pressure in the Indian market. And as you rightly said, this is not a game of few months. This is there to stay. And we, of course, have a very low pricing in India already, and we'll have to wait and watch in terms of what the intense competition does to the pricing. But whatever we have heard, at least on the street, people are talking about a monthly treatment cost as low as 5,000 rupees, and which will, of course, provide huge access to patients, but will, of course, dent the margins and the revenue expectations in the Indian market.
So a part of that, of course, would be how much of the market you're able to corner and how quickly, Mr. Mittal. So do you have a sense of what that percentage of share will be?
See, we do not have an active India development strategy because we had divested our branded India business to Eris 2 years back. And we commercialize this drug through our partners in India. And India is the only country which requires clinical trial and clinical investments, unlike the other countries in the West and other emerging ROW countries where you do not need any clinical trials. So while we have completed all the preclinical work, we have an approval from CDSCO to commence our phase 3 clinical trial. But at this stage, we are not immediately starting our clinical. And the reason I also mentioned that India, there will be many number of players, the pricing and the margins are not expected to be in line with what we are expecting from our export markets. So right now, our focus is more on exports.
In your boardrooms, in your war rooms, though war rooms is a bad term to use right now, but in your boardrooms, you would have penciled out what the TAM is and could be over the next 5 years, let's say, and based on the various stages in various countries that you might be in with approvals and launches, so on and so forth, and partnerships and your share thereof, you would probably have some sense of what is the pie of that share that you could potentially grab, right? I'm presuming that's how things might be working. Correct me if I'm wrong. Can you share some of those numbers with us?
Well, I wish I could share those numbers because those numbers are changing, to be honest. I mean, if you look back, 1 year back, the global market was expected to be $150 billion for the innovators. And today it's less than $100 billion. And the pricing war between the two innovators is, of course, shrunk the opportunity. And what we have to see is in next couple of years, what are the other drugs under development from the two large diabetes company, and many other companies are also having, advanced drugs which are in phase 3 clinicals. So we do expect more drugs to come in, more GLPs to address diabetes and weight loss. And of course, the pricing war will continue. All the companies have created capacities, invested billions of dollars. So that's, when I look at 4 years, 5 years out, there are a lot of variables. But that said, just with liraglutide, semaglutide, I definitely expect this opportunity to contribute a couple of $100 million to Biocon.
Okay, this is by what? I mean, is there a time frame or a bunched up number of years where this opportunity presents itself?
See, by 2031, I would say, because that's when it goes off patent in US and Europe. So if you look at today, $30 billion market for semaglutide, a majority of that is in US and Europe. So of course, those revenues will start only once the patent expires. But it will start earlier for emerging markets. And there are very large emerging markets and markets such as Canada, where there's a huge opportunity.
Siddharth, a little off just talking about liraglutide and of course the biosimilars space, wanting to understand whether there is any restriction or concern of raw materials getting stuck because of the war situation. We've been speaking solely, from the context of crude, gas, etc. Yeah. But important raw materials get imported through the Strait of Hormuz as well, isn't it?
Yes, so most of the raw materials do come from China, so that route is not affected as we know. But we, of course, are dependent on solvents, which are petroleum products or byproducts of petroleum, which is dependent on the Hormuz. So we do see the pricing going up. We have not seen large shortages yet, but where we see a bigger disruption is on the material going out, and that's where the cost of shipping as well as the time it's taking is impacting the exports.
Sense, please, on what is the kind of impact, or do you have containers stuck right now? What is the current situation as far as Biocon is concerned?
Well, we do not have containers stuck. We, of course, are now, instead of sea shipping the drugs, we are air shipping it. So airlifting is more expensive. So it comes at a cost, but we, of course, have a commitment to our patients and customers, and we have to get the drugs to them through air instead of sea.
What is the increase in cost that you have to bear as a result?
Well, as a overall percentage, it will not be significant. But when you look at the air to sea, there's almost 3 times the difference. But would it be a material impact on our earnings? I don't expect at this stage that it will majorly impact our earnings.
Siddharth, very quickly, but margin impact, if at all anything, how much? 0.2, 0.3, 0.4%?
No, it should be less than a percentage.
Less than a percent. Okay, fine.
Okay. Thank you so much, Siddharth Mittal, for speaking with us, CEO and MD of Biocon.
Dinshaw Irani, CEO of Helios Capital, with us on the show to talk about his thoughts on the current market situation. Dinshaw, great having you. Thanks for taking the time out. I was about to ask you, do you reckon you need to change your specs now, considering that the specs did their bit of the markets moving up, now they've come off? So is that the reason why you've changed them?
Precisely, you got it, Neeraj. You hit the nail on the head. Yes, I've done that because of this. I think the luck was running out on those glasses. So I needed to change my luck, so change the glasses.
I guess so. So Tamanna, if specs can do the trick, Dinshaw Irani is playing his part.
Yeah, I think we should try and get a whole different model of glasses every day to see what happens. Dinshaw, is this, now when nothing is clear, are you looking to invest, use cash, sit on cash, take a break? If I had to give you multiple choice questions.
No, Tamanna, actually, we've been investing our cash quite proactively because we think we're somewhere in the end game, actually. I mean, it's the whole, see, the problem started with the Iran war, and actually it could have come at the worst time because just then India was taking off. You'd seen FIs coming back in a small way. They were nibbling at India as such, and 2 consecutive quarters of good earnings growth. I think this could have come at a worse time for India, at least. And that story took a setback because of the Iran war. And frankly, I mean, rightly so, also because we are one of the largest importers, second largest rather importers of crude in the world, importing almost 5 million barrels a day as such. So basically, there was a problem for us if crude shoots up, and it did, as expected. But our belief is that we are somewhere in the end game as such, in terms of the war. and crude may not normalize back to those $60-65 a barrel, but even a 70-75 is a very big breather for us. And why we are saying is in the end game is because you can make out from the kind of projectiles being fired out of Iran, the numbers have come down quite sharply. They started off with some 500 missiles a day. Now it's down to some 10 missiles a day. They started off with some 800 odd, I think, drones a day. Now it's down to some 20 drones a day. So it's obvious that they're somewhere close to the end of their ammunition and may not last out that long as such. There'll be some compromises, but hopefully, I think things will pan out on an even scale.
Yeah, if the 2-day market move and today's market move as well, we are now trading close to the high point of the day, so really strong show. Just mark the Nifty once before we continue our conversation with Mr. Dinshaw Rani, but just bring up the Nifty chart once if we can. Look at that sharp upsurge, 150 points in the green, 23,550, reclaiming 23,500. Dinshaw, it seems that you are constructive. The question would be if you believe that this will be a short-term relief rally, or do you believe the damage to the numbers mean that now we could have a more structural move if this gets closed?
Actually, Neeraj, I don't think it's a relief rally which is going to happen. I think we were on a structural move, not in Jan, but Feb. The second half itself we started seeing, because by then the numbers were out for the December quarter, and I think the growth rates were in. So obviously there was a structural move happening, but unfortunately got a disconnect because of the war. And our belief is when this evens out, when the war ends and things start normalizing, I think there'll be a real structural move for India also. I mean, we were in touch with quite a few corporates because of the quarterly numbers, and the months of Jan and Feb have gone very well for them in terms of, demand growth and stuff like that. March, obviously, it's all over the place now. I mean, March, I don't think any of the corporates are even ready to talk about what's happening as such. And our belief is that if that March is the worst month that is possible, as in the things get over in March itself, probably from that next quarter onwards, which is April to June quarter, you'll start seeing growth coming back. And our money is actually on mid and small caps, because our belief was that with these kind of growths that this particular segment has shown, this cohorts have shown of mid and small caps, we felt that this is where the real money will flow in, and we continue to believe so.
Funds survived these last 2 or 3 weeks relatively unscathed, Dinshaw, or you feeling the pain? And is that also now, in a sense, impacting the kind of decisions you're making when you're saying mid and small caps? Are you looking for safer bets?
No, actually, Tamanna, fortunately for us, we saw inflows. In fact, March also has seen a good amount of inflows for us. We haven't seen redemptions per se. We've seen sporadic redemptions here and there, but not big numbers per se. So we've continued on our merry pace. And as I said, that whenever we do get cash, we try and put in the stocks where we have high convictions, where we've seen a correction happening. And that's where we keep putting in our money. So our thought process doesn't change. We are very clear that domestic consumption is the way to go. And this is what India needs, actually. The fact that you need velocity of money to kick in, and which is what is being provided by the Generation Z, which is now becoming a big part of the consumption base. I think that's where the comfort comes from on the domestic consumption. And we've seen this in economies earlier also. China in the early 2000s or mid 2010s, USA or Germany or Japan in the 80s and stuff like that. So basically, this is where we feel we are today, given that our per capita are going to move up. The consumption will pick up. And that's where, if you look at our portfolio, it's mainly consumption oriented. Even the BFSI that we are into is more of consumer facing BFSI. And that's why around 60-70% of our portfolio is weighted towards that. And we continue to remain there.
Autos be higher up on that consumption list?
Yeah, they are actually. But in autos, what we've done is, since we are not very comfortable with EVs in EV competition, once it opens up, the Indian markets open up. I don't think our companies, which are right now thriving on EVs, will prosper there. I mean, they'll have a lot of competition to deal with. That's why we are out of passenger vehicles. but we're in the two-wheeler space. Obviously, we've got the biggest two-wheeler play in which is Hero Motor, and we got the biggest, not biggest, one of the big EV plays, which is Ather Energy. These are the two that we continue to be in the two-wheeler. In the CV space, again, we've picked up the pure CV play, which got demerged recently, and that's where we picked it up from the Tata Group as this, Tata Motor CV as such. So these are the auto exposures that we have, and obviously the NBFCs that we are into are more of auto-facing consumer, rather mortgage companies, the auto lending companies as such, which lend to two-wheelers and four-wheelers and CVs. So that's where we are exposed to.
Okay, fair enough. Dinshaw, thank you so much for joining in. May the new glasses see you, the market, and all of us through, and at least help see the screen more clearly, if nothing else.
It's working right now.
It's working so far, I must say. Thanks so much, Dinshaw Irani there. Pramit Pal Chaudhary, South Asia Practice Head for Eurasia Group, joining in now on this leg of the conversation. Mr. Chaudhary, thank you so much for speaking with us. Just trying to understand from the several things that the US President Donald Trump said last evening, at least India time, what is the sense you're getting? Are they closing in? Are the United States closing in on some sort of exit or off-ramp, at least for them, from the war, when they're talking about this coalition in the Strait of Hormuz?
So yes, I think you're looking at a president, a US president, who is now increasingly disenchanted with the war. He had gone in thinking this would be a very quick battle, that the regime in Iran would change overnight. And nothing of the sort has happened. And it is now, the war has spread. He himself has said, I did not expect Iran to carry out attacks on the United Arab Emirates or Saudi Arabia. And I think for the Americans was the revelation, for example, that Iran has now become the toll master of the Straits of Hormuz. And the economic costs of the war now spreading into the United States. So by now appealing to allies, asking even China to come in and join him, he in effect is, I would argue, trying to spread the blame. He is trying to say that it's ultimately, if I have to pull out, or if I do pull out, it's because other countries who have bigger stakes in the Straits of Hormuz than America does, they didn't come and assist me. So you see an American president, you see Trump now disenchanted with the war, but looking for an off-ramp. He knows he can't just walk out without taking considerable political damage at home, but he needs to find either somebody to blame or some sort of a face-saving solution for him to walk out of it.
Mr. Chaudhary, I'm just wondering, so you've described one side of this picture. The other side, of course, or rather the other two sides is Israel and Iran's own response. And there seems to be belligerence on both those sides. So the off-ramp that Trump is looking for might not be so easy to find.
Israel cannot sustain its air attacks on Iran without U.S. support. I mean, ultimately, the Israel-Iran conflict or rivalry and so on, that's fixed. That's something that, in effect, what Israel needed was to be able to bring America into the battle. And they did so, but now you see the Americans slowly losing their interest in this. The Iranians know this full well. The Iranians have been quite open, and definitely in their conversations with Indian officials, that we are prepared for a 60 to 90-day war, and so are the Israelis, but not the Americans, because for them it's a political battle. The Americans don't have, Trump is the weak point in all of this. And that's basically what you're seeing playing out here. But the instant the Americans say we're out, Israel can carry out a few airstrikes, and it has accomplished one of its basic fundamental target of pulling back and massively damaging Iran's nuclear and missile program. It has not accomplished regime change, but I think that was many ways seen as a bonus. So that's where you are right now. So Israel will have to pull back. Iran comes out of this war weakened domestically and militarily, but in many ways now positioning itself as a leader of the Straits of Hormuz.
Mr. Chaudhary, here's the counter question to that, and this stems from a piece that I read from Ray Dalio. And in his piece, he writes that if the US were to lose in this way, and loss for US means Iran controls the Strait of Hormuz, that if US were to lose in this fashion, it is similar to what the Suez Canal crisis was for Great Britain in 1956 or many such others. And for a country whose currency is extended financially, has a lot of creditors, etc., this quote-unquote loss could be catastrophic. And therefore, my summation of his post is that US may not rest until they, in some fashion, have some say over the Strait of Hormuz, and not Iran having that.
Iran has already showed that it effectively has veto power on anybody moving anything through the Straits of Hormuz. And the Arab Emirati, the Gulf monarchies, are coming out of this war and saying, we recognize now that we have to strike our deal. America is not the guarantor of Gulf security anymore. We have to strike a deal with the Iranians after this war to maintain our position. So that, I think, has already happened. It is not catastrophic in my view, in the sense that this is a further nail in the coffin of America's decline as the world policeman. But keep in mind, that's partly because America no longer wants to be a policeman. Donald Trump is very clear. I don't see why America should be defending even Europe. Forget about the Persian Gulf or Southeast Asia or Taiwan. He's quite open about this. He doesn't, I would argue, he's a bit incoherent about his strategic thinking, but he instinctively wants America to withdraw from the world, but is doing it in a very chaotic fashion. That is, I think, where we're heading right now. But yes, this will be a major, in the same way that the Greenland fiasco has massively undermined the credibility of the NATO alliance and the Atlantic alliance. This will now undermine, again, America's role in the Persian Gulf, something that goes back to Jimmy Carter, the Carter Doctrine of the 1970s. The question now really for India is, does this also spread to the Western Pacific? Does the American military credibility in the Western Pacific at some point also come under question? And we'll have to see whether China decides to test that at some point.
How are you looking at India's diplomatic efforts during this situation? One of the few countries whose ships are getting past the Strait of Hormuz. We're clearly talking with Iran in a way that allows our ships through. We've said yesterday that the trade deal with the United States will be signed once we have clarity on the rates. How do you see India's stance?
So what we're seeing now is that we are literally negotiating ship by ship with the Iranians, and the Iranians are allowing our ships through. And I would guess that the Iranian motives are a number of things. They see India as a neutral player, if not at least a frenemy in this conflict. Pakistan, for example, they're very hostile to because of Pakistan's defense pact with Saudi Arabia. They recognize that we have a very close relationship with Israel, but as one Iranian diplomat once told me, we will never tell you who your friends should be, but never let any of your friends tell you who your enemies should be. In other words, we accept that you have two paths. You can run two tracks at the same time. They also see us as a global South player, which they associate themselves very strongly with. That's one of the reasons they said, India, you hold the presidency of the BRICS. We would like the BRICS to make a statement on this war. It's a little difficult because United Arab Emirates is also a member of the BRICS, so getting that through will be tough. But they can see us as a separate category of a nation compared to, as they said, genuine allies of the United States, which
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he
Hello and welcome to The Big Question. I'm Nisha Poddar. We are low on energy. As the Middle East tension really shows little sign of de-escalation, Iran's control on Strait of Hormuz, a global checkpoint for the largest amount of energy supply, has escalated the price of fuel, but more importantly, remember, also created a severe shortage of fuel across the globe. The oil shock is seen to be more severe than the destabilization that was seen during the Suez Canal crisis of 1956, which most of us have read about in our history books. As the US-Israel war against Iran is really creating history as we live it, well, the cost of business as usual and more importantly, life as usual stands out emphatically. As we scramble for fuel supply, well, several countries across the globe stand to be impacted. Sri Lanka has declared 4-day work week with Wednesdays off. Our neighboring country, Pakistan, has got schools and universities shut for 2 weeks. Work from home announced for the offices. Our next door neighbor, Bangladesh, they have seen public and private universities being shut. South Korea has really capped the domestic fuel prices and their limit on coal-fired power generation capacity has been lifted. And also remember, nuclear power plant utilization raised to as high as 80%. Philippines, where the government offices have now moved to 4-day work week. Thailand has also asked the government officials to work from home. in an attempt to conserve fuel. Vietnam has seen businesses to be asked to encourage work from home as well. Myanmar, there the private vehicles are allowed to ply only on alternate days. So that's the global impact, and India no less, though we have been so far much more resilient than most of these countries, our neighboring countries and in Southeast Asia. But remember, the LPG shortage has brought home the impact of the war far away from us. Most commercial establishments with LPG usage are affected. Certain manufacturing units are shut. And while our economy really suffers due to a higher crude price, as remember, our import bill is inflated, with also rupee depreciation reducing our purchasing power, making crude much more expensive. And finally, there are price hikes which are really percolating down to several sectors, seeing inflation really pan out, including, remember, edible oil, feedstock for so many industries. So the big question tonight is that, is the world's fuel future at risk? And today we are asking this very important question because this particular matter has come home. A war which is being fought far away from us is really impacting all of us here, and let's break it down on what lies ahead with our panel of experts. In fact, Purva Jain is joining us. Along with her, we also have Narendra Taneja joining in as an oil expert. We also have Sankalp Gurjar joining in to talk more about the geopolitics of the region, and Jeffrey Dennis, who's an independent emerging markets commentator. Lady and gentlemen, so good to have you on NDTV Profit on this very, very important discussion which is impacting almost all the countries and all the lives in the world. Purva Jain, my first question to you, how do you see this particular oil shock at this present moment being historic and quite disruptive, more than any time before that we have seen? Purva.
Thanks, Nisha. I think we have seen, like you mentioned in the past as well, we have seen acute financial stress on economies due to fuel price shocks. And in fact, very recently in 2022, when the Russia-Ukraine war happened, we had seen stress on the fuel systems at that and energy systems at that time as well. This time, because the duration is unclear, there is an important, transport point that is being choked. Economies which are producing energy and oil for us are not being able to do the production. So the supply is also getting impacted. Earlier, probably the price points were the main issue. Right now, along with the price, the supply could also be a chokehold. There is emergency response from different economies, like you mentioned in your presentation earlier. We are seeing Sri Lanka, Pakistan, Vietnam, everybody having an emergency response to this scenario. Even India has introduced some measures. So a lot of reaction from economies is happening. But it does sort of put an important point that how the economic, energy sovereignty and diversification of fuel is something that countries need to think about in the future now.
That's right. So that matter is pretty grave and is coming out very clearly in what you said, Purva. But let me also take it across to Sankalp Gurjar. Sankalp, how do you assess this geopolitical tension and the economic impact of that?
I see both of them are interlinked. The economic impact is because of the geopolitical tensions that we are looking at, right? So what this crisis has done is underline the fact that we need as many suppliers as we can, not just for oil, but also for gas. Because in India, I think the more serious problem is in terms of supply of gas. We depend a lot on Qatar. And I think this crisis has underlined the fact that we need to sort of diversify our supply of gas, which is also closely linked with the geopolitics. And I think in terms of future of fuel, I think renewables have also need to be sort of figured into our calculations now, given that how serious this whole crisis has become with the Middle East on fire.
That's right, Sankalp, you made a very important point which needs to be deliberated further. In fact, nuclear energy is also something which is getting ramped up, but it can't be a switch on, switch off button overnight. Narendra Taneja, your expert views on what we are going through and really grappling with globally. How do you see this, and how critical is it for this geopolitical tension to really come down very soon because of its impact overall?
You see, the first world is still a global oil economy. If you look at the data, close to 82% primary energy still come from fossil fuels. That's oil, gas, and coal. And at the same time, there is no shortage of oil in the world. There's plenty of oil available. There's plenty of gas available. No shortage at all. So what we are witnessing right now in terms of a shock is mainly in terms of economy, because the prices are going up thanks to the disruption in supply. And second, of course, disruption. You see, so these are basically, if you look at it, geopolitical issues. For instance, the Strait of Hormuz, which is kind of has been more or less closed by Iran, has never ever been closed before. So countries, big exporters like Saudi Arabia, Kuwait, Qatar, and all these countries were quite confident that come what may, Strait of Hormuz would never be closed, just because it's never been closed. And but now Iran feels that, look, that's the weaponizing Strait of Hormuz is the only geopolitical weapon they have in their hands. So they've done it, and they've done it quite effectively. So when you talk to them, they say, we haven't closed it. But actually they have closed without closing it. So, and America is struggling, a big power like America is struggling to get it reopened, to demine it part of the areas, as they say that, because part of the area had been demined. So it's a huge geopolitical issue at this stage. But oil at the same time, and the same goes with the gas, is a geopolitical commodity. 90%. Look at the history since the 1970s. If you go back, look at the history since, during the Second World War. During that time, Germany had targeted so many oil tankers, in total more than 300 tankers were targeted and sunk actually. So it's nothing new. So the world was not prepared for Strait of Hormuz being in the kind of shape it is today. So prices are going up, tensions are going up, plenty of oil available, still oil prices going up. In fact, until yesterday, oil sector was struggling with one thing. There was not enough demand. That was their worry. And that's why private prices are going up. So we are now in a situation where you have plenty of oil available, but this oil just can't move south of Strait of Hormuz. That's the world for you today.
That's right. In fact, many important points made there. And one most important point, that the world was not really prepared for Strait of Hormuz to be shut. But the US and Israel, while targeting Iran, should have known that that's the power, tactic that can be really played around in the game of war globally as well. Jeffrey Dennis, independent emerging markets commentator. Jeffrey, how has your view now changed on the emerging markets, especially because of the growing economies and developing economies and some of our neighboring countries which stand lower in pecking order compared to us in terms of economic development? They are the ones hit first. So how is the global order and economic view as well as the market view really changing with this particular event?
With this particular event, as you say, the biggest impact, I think, on emerging markets is coming initially from a movement of money back towards the US dollar. The US dollar has been stronger over the last month or so, not quite a month yet, 3 weeks, I guess. And this has led to currency issues in emerging markets. And of course, emerging markets did so well last year, and indeed so far this year. This has led to a lot of money coming out of emerging markets once again. Now, it's not simply a dollar adjustment here, although this is contributing to it significantly. But this has been mentioned before. What the higher oil price does in major emerging market country importers such as Korea, Taiwan, Thailand, India, Turkey, is to raise inflation because the oil price has gone up to the extent they can get imported oil, worsen the balance of payments risk, and also lead to concern over whether you could see more interest rate cuts down the road, for example, which just are completely off the table at this stage. So you're getting this real economic impact on EM, but you're getting the major FX market impact, which is the flows have now started to go the other way, away from emerging markets. What's notable to me, final point I'll make at this stage, is that the one region that's standing out and doing relatively well in this is Latin America. Well, one, Latin America is very well divorced from this area geographically, the Middle East, where things are happening. And secondly, of course, you've got Brazil, which is a big net oil exporter, and Mexico, which is an oil exporter as well. So there's a lot of logic to this, but this is bad for EM economics, and particularly in many major oil importing countries, but it's also bad because it's pushed the dollar higher and it's creating currency pressures.
All right, Jeffrey, you've given many takeaways, and especially how now two different pockets are being created amongst the emerging markets and developing markets. Ones, those who are severely impacted because of the fuel shortage, and the ones who rather are now immune or less impacted, and therefore their premiumization is very likely. But I want to pose a question to Narendra Taneja. Narendra, we have seen that at the present moment, while oil prices have risen because of this global tension, because of the supply chain constraint, before that, for a longest time, they were at stable $60-70 per barrel level, and we enjoyed that. Now, whenever this tension really lifts, the huge supply of oil that is going to come in is also going to impact and benefit all of us, and probably will offset the losses.
Well, if Iran is mainstreamed, if there is a real regime change, or Iran gets a regime which is kind of more friendly with neighbors in the world, and Iran, as you know, has got the second largest reserves of gas, and when it comes to oil, Iran is a superpower. They've been sanctioned, so they have not been able to realize their full potential. But if Iran gets mainstream in terms of being part of the world, then that oil and that gas will be available. And since we are very geographically very close to Iran, we will be among the frontline beneficiary of that change. So, if, for instance, you go only by demand and supply, because oil is a commercial commodity. If you go by demand supply fundamentals, oil should not be more than $60 per barrel today, not even $1 more than that. But whatever you are seeing today, $105 per barrel, that's all geopolitical premium. It all started happening, after America and Europe, they weaponized oil to punish Russia. Oil prices started going up, and since then it actually has been moving northward. Now, again, it has been weaponized because Iran has decided to weaponize the weaponized Strait of Hormuz, which is basically supplies 20% of oil to the global supply system. Most of this oil is gone now. It's not in the global supply system. It's not coming. Not 20 million barrels, but almost like 16 million barrels. Imagine 60 million barrels. That's roughly 16% of oil, disappearing from the global supply system. So prices are going up. But once the war is over, and if Iran joins the mainstream, the global mainstream, especially in terms of oil and gas, then we are talking of really very attractive prices for oil, maybe coming down to $55 per barrel on a sustained basis, unless there is another geopolitical trigger. You never know that. You see, so in such a situation for us, since we import 89% of our requirement of oil, 56% of our requirement of natural gas, if oil prices drop post this war, post this shock, all right. Okay, the price we paid, but not bad. The same goes for the natural gas. So it's very bad landscape right now. But post the war or post this crisis, if the world comes out with cheaper oil, cheaper gas, all right, we'll still regret it, but not that much.
Right. Jeffrey, quick word on that particular aspect, that whenever the pressure lifts, how are you going to assess this situation, and how much more positive will that be?
I completely agree with what the previous speaker said. I mean, we were at $60 a barrel for Brent not very long ago, yes. And that is a much more realistic, quote unquote, normal price at the moment. And I think it's simply the shock over the US decision to go to war, and secondly, as has already been discussed by the panel, the shock of effectively shutting the Strait of Hormuz, which in normal times transports 20% of global oil demand. So My own feeling is that the oil price is probably going to trend a little bit higher in the near term until we get sort of sense of resolution of this war. But eventually, it will start to come down once this war begins to come to an end. Bringing Iran stream, if that would be possible down the road, that would bring oil prices down further. And I think when that happens, logically, notwithstanding the inflation and balance of payments impact and growth impacts on EM from the bout of higher oil prices, you'll see people putting money back into the emerging markets once again because the dollar will go down.
Yes, it has to be short-term in nature, and only then, Jeffrey, we'll be able to recoup what is being lost in terms of, as you mentioned, balance of payment, and several companies and several sectors being impacted because of inflationary trends, because of higher oil prices. Purva Jain, when we look at this particular situation, and on two important aspects which have worked well in the context of India compared to many other countries that I had enumerated who have taken some drastic steps for really containing this particular energy crisis. Two things are that, of course, we are given the waiver to buy from Russia, though for a short time. And on the other hand, our Ministry of, External Affairs has been working overtime to really have the diplomatic channels open with Iran in terms of getting the passage of our containers. In both, we have been getting some successes. How do you assess the situation and also the outlook on how this is really panning out for India?
So yes, of course, I think the diplomatic ties and diplomatic relationships matter a lot in, crises like these. And India has managed to maintain good diplomatic relations and been able to, compared to other nations, manage the crisis also a little bit better. Of course, how long the duration of the conflict is going to be sort of the real decider how things will pan out for all countries, including India. If it's a longer duration conflict, there will need to be more measures that all countries will probably have to take because there might be, supply might be disrupted for even longer. For now, if you look at the markers, like if you look at the Japan-Korea marker and your Saudi propane future prices, they seem to, of course, be higher, but taming down a little bit. So like, for example, the Japan-Korea marker for May a few days ago was around $21 per MMBTU. It's already showing to be around $19. So there seems to be, signs of some easing in the market that might change in, days to come in how things pan out during, in the geopolitical scenario. But again, I would like to reiterate, like in what the other panel members have been also mentioning, that we have seen this in the past. If things ease out, it will all go back probably to normal. It will have some inertia. We will have fiscal strains, like last time when the, Russia-Ukraine crisis happened, we saw this fiscal strain in terms of subsidies for fertilizers. They were massive subsidies we had to give out, and we still continue to give massive subsidies out for, the fertilizers. And we don't know how that will pan out for us in the next budget now, considering that this crisis has happened. So it's a vicious cycle which kind of continues when, because like Mr. Taneja mentioned, that there is, geopolitical impact of oil and gas. There's weaponizing of these resources.
Yes.
So India now needs to think about sources like renewable energy as well very actively.
All right. So Purva, that renewable energy aspect, very, very important. I must say that everybody over here in unison is saying that the war must come to an end. Remember that America is spending $1 billion a day on this war. So it's an expensive proposition. There is lack or resistance from global leaders in joining hands and really taking part in this particular war. But for India, on the other hand, a few things we have to really look at in terms of the measures of solutions for a longer term proposition if this really continues longer than we expect. Sankalp, what are the various aspects that can be looked at? You had earlier mentioned renewable energy. India has built its capacity on that, but it's not start and stop. It has taken many years, more than 15 years to really start start building that whole renewable energy ecosystem. And nuclear power is another aspect where some of the countries have really elevated the utilization of nuclear power. How do you see our energy management from your vantage point?
For India, given that stage of development that we are in, there is no choice between oil and gas or renewables or nuclear. We need all of that, and we need a lot of that at the same time. So there is no choice. That is my point number one. Secondly, with renewables also, there is geopolitics at play because China dominates the supply chain there. So India will also have to figure out a way if there is a crisis in future so that you will not be having blackmailed by the Chinese, Chinese policymakers there. And in terms of nuclear, I think there is a great deal of reluctance even now. The government has passed the Shanti bill, and then there have been some steps that we have taken. But still, there is a reluctance to operationalize the nuclear energy for the market. So I think we need all three of them, and we need much more of that at the same time. Otherwise, India's economic growth itself will be imperiled because we can't be energy hungry economy if we want to be the second or third largest economy in the world. And so I think geopolitics will come into the picture. And just a final point here, that foreign policy will play a very important role, not just in securing access to supplies, but also in ensuring technologies that we will need to move ahead and transition from renewables and, from other sectors.
That's right. In fact, several steps have been taken in terms of also the strategic areas of interest. Sankalp, you raised a very important point because very recently the government has also made the Press Note 3 very flexible in terms of collaboration with China in the technical know-how in the sectors of the future. So very proactive steps have been taken. Jeffrey Dennis, one word quickly on whether this $100 per barrel price point has been baked into our valuations, and can that be normalized for a longer time if this situation really continues, because market has a habit of normalizing and also re-rating certain countries and markets as per the current trends, and once it's baked in, it's business as usual.
Well, markets, of course, tend to react very quickly to major events, and this is obviously a major event, $60 oil up to $100 oil. Markets tend to react very quickly to that, as I say, and you can see it happening with the U.S. equity market. So if oil is down, if oil is up like it is today, looks like the U.S. equity market may be down, and vice versa. So I think you got to say that in terms of people's expectations, anyway, the $100 oil Brent oil number is essentially baked in. Now, is it baked in, however, to A, valuations, and B, economic consequences? And there I have my doubts, because the logic would be, if we stay at $100 a barrel for a sustained period of time, and let's think about India for a minute, inflation goes up, that makes it harder for the RBI to cut interest rates again, that impacts growth, you get more pressure on the rupee because the balance of payments deficit, the trade deficit goes up. Well, then you get a second knock-on effect in terms of macro. So I truly believe the price of oil today gets baked in quickly to markets. What does not get baked in is the potential macroeconomic effects of that, and how they all play out will, of course, depend above all on, is this the peak? Are we going to go higher? And I think we may go higher for a period of time. And more importantly, how long does oil stay at this $100 barrel plus level? Yes. Because then the economic impacts will be greater.
That's right, Jeffrey. And in fact, one more point is that inflation keeps going up on the uncomfortable levels, then RBI will also have to step in. And we are in a beautiful, comfortable interest rate cycle, which we don't want to get reversed at this point. Narendra Taneja, we have 1.5 minutes left. Final question to you. How do you see all this crystallizing and the way forward from your vantage point?
Well, it all depends. You see, America has moved Marines from Far East now to the Persian Gulf area. If they really go in there and try to occupy Kut Island, which is the main export hub of Iran, then we are talking of a longer period of time and we're talking of an escalation. Let's not forget one thing. US has so far not targeted Iranian energy infrastructure. And in return, Iran has retaliated, but they have still spared energy infrastructure of most of the countries. So it has not reached there. But if really they start hitting energy infrastructure, then it escalates and the oil price can go up to even $150 per barrel. But then let's not forget, the biggest consumer of oil is America. If oil goes sustain even at $100 per barrel, the American consumer is going to be among the worst victims. And President Trump and his party might lose elections. They have elections to Parliament, Congress, as you know. So it's a very complex landscape. My own sense is America cannot afford this war to go on for more than 2 more weeks. If that happens, then actually not only the world, but President Trump himself is in deep trouble.
All right. So many big, disruptions are set to really happen. But if this war really escalates, while we were discussing on the energy shortage, which impacts all our lives, and of course the economic impact, the humanitarian impact is also something we should not lose sight of. But thank you so much, ladies and gentlemen, for joining in with your expert take on this very important discussion on the oil shock and how it impacts the world. Purva Jain, Narendra Taneja, Sankalp Gurjar, Jeffrey Dennis, thank you so much. So with that, we come to the end of this very critical discussion, which is not over yet because we still have so many developments to see, and de-escalation of war is going to be critical. If that doesn't happen, energy shortage is going to touch more lives every single day. With that, it's a wrap on The Big Question. Thanks so much for tuning in.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right order decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, And he is now bringing his analysis to the show that the market watches.
Hello and welcome viewers, you're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today first. So the Dalal Strait wrapped up another volatile day of trade in green in the third dead cat bounce seen in 3 weeks. Now Sensex has jumped more than 500 points. Advance decline ratio has ended in the favor of the advances. And looking at the sectoral picture, so that was tilted sharply in the favor of gains with most of the sectors managing to claw back the previous losses. Metals were shining bright at close with autos in the fast lane, and also realty and consumption were also in good shape. So on the flip side, if we look at IT and FMCG were on the back foot and the only two sectors that were in red. And viewers, let's look at JM Financial now. That remains bullish on Eternal, maintaining a buy rating with a target of 400 rupees. And the brokerage believes that, the Blinkit business will emerge stronger, adding that recent supply side disruptions may be overstated. JM Financial also, retained its 18% year-on-year November growth forecast for quarter 4 of FY26 and has said that the concerns around new competition in the food delivery are exaggerated, and it recommends that long-term investors with a 12 to 18 month of horizon should aggressively accumulate the stock. Now, next stock in focus is Oberoi Realty that has entered into a development agreement for a Mumbai land parcel located at Aram Nagar in Versova, Andheri West, Mumbai, owned by MADA. So this project will be developed in line with Mumbai's development control and also promotion regulations 2034. So based on the current provisions, Oberoi Realty expects its share of the free sale component to be around 17.18 lakh square feet of the RERA carpet area. Next stock in focus is Sun Pharma. That is after the US FDA has accepted its biologics license application for Ilumya. So the company has received a nod to explore an expanded therapeutic use with Ilumya now aimed at treating adults with psoriatic arthritis, and if approved, the drug would really move beyond its current use in plaque psoriasis and also strengthening Sun Pharma's biologics portfolio and also opening up a larger treatment opportunity. Next stock in focus is NoSil. That is, after announcing a 130 crore of capital expenditure plan for capacity expansion at its Dahej manufacturing facility. Now, the investment is aimed at strengthening production capabilities and also supporting future growth across the key rubber chemicals. So this move signals NoSil's confidence in the long-term demand and also its focus on scaling the operations to meet customer requirements. Next stock in focus is Zydus Life Sciences after its US arm has entered into a licensing agreement with South Korea-based PRG S&T, which is a company focused on rare genetic diseases. Now, under the pact, Zydus will license Progerin, which is a drug aimed at treating Hutchinson-Gilford progeria syndrome, and also this agreement strengthens Zydus' presence in the rare disease and also specialty medicine space. Next stock in focus is Persistent System that is set to roll out AI-powered solutions for the healthcare and life sciences sector in partnership with NVIDIA. And the company has said that the collaboration will allow the hospitals, pharma companies and also research organizations to deploy advanced generative AI and also precision medicine tools using NVIDIA specialized software and also hardware ecosystem. Now, Persistent will integrate NVIDIA's BioNemo NIM microservices and also CUDA accelerated platforms into its offerings, enabling drug discovery workflows, medical image analysis, patient care automation, and also large-scale clinical data processing. So, the company has said that the move is aimed at strengthening its position in healthcare AI, which is one of its fastest-growing verticals globally. Next stock in focus is Kalyan Jewelers, that, as disruptions in the Middle East begin to weigh on the operations. So according to Axis Capital, the company's planned store openings in Q4 and Q1 could see delays. And in addition, the closure of factories in Morbi is impacting the supply of construction materials, potentially affecting the fit outs and also expansion timeline. So this evolving situation could really pose short-term execution challenges for the jewelry major. And viewers, let's look at some brokerage notes now. JP Morgan has upgraded signed DLM to overweight from neutral, setting a target price of 400 rupees. The brokerage notes that the stock has fallen 33% over 3 years, making it the cheapest in the EMS space. And JP Morgan has rejected concerns that the EMS growth story is over, forecasting a 22% revenue CAGR for signed DLM's EMS business over FY26 and FY28, and also remains optimistic on a sector recovery. Next stock in focus is Bajaj Electricals, that has announced the acquisition of Morphy Richards brand rights for 141.4 crores, and this is under a definitive agreement. The company will acquire the intellectual property and brand rights across India and also select South Asian markets, gaining full ownership and also control. So this move builds on over 2 decades of partnership, with Bajaj having licensed and also grown the UK origin brand since 2002. So this acquisition strengthens Bajaj Electricals' presence in the premium home appliances and also personal care segments. Next stock in focus is Power Mech, that has won a major order from Adani Infrastructure worth about 710 crore rupees, and this contract covers operations and also maintenance at the Roda thermal power plant in Maharashtra, including regular overhauls of its 5 big units. So the work is set to run for 5 years from the start date, adding a strong boost to Power Mech's project pipeline. Next stock in focus is Time Technoplast, that has picked up a new order worth about 116 crore rupees from a major public sector company, and this deal is for supplying type 4 CNG cylinders. This is adding to the company's growing presence in the clean fuel storage solution space. Next stock that was buzzing away in trade was Puravankara, and it has received a letter of intent worth about 280 crore rupees from VIT in Vellore. So this contract is for building a new academic block on the campus, marking another large institutional project for the company. And this order adds momentum to Puravankara's construction pipeline in the education sector. Next stock in focus is Omax, that has received RERA registration certificates for 2 of its upcoming projects, clearing a key regulatory milestone. And the approvals allow the company to now move ahead with the construction and also sales, giving a boost to its development pipeline. Now, this also signals stronger compliance and also transparency in its ongoing project rollout. And whereas Kotak Securities has, is staying constructive on India's auto sector, also expecting steady growth in the passenger vehicle sales next year. And this is led by strong SUV demand, which is a firmer rural outlook and also new launches. And margins may stay under pressure for now because of the commodity costs, and also global luxury makers also warn of weaker profitability ahead. But Kotak believes that the recent fall in the stocks like M&M and Maruti is overdone, and sees it as a good entry point, even as the gas supply situation remains a risk, to parts of the auto chain. And viewers, in an interministerial briefing today, the government has said that the crude inventories remain adequate, and also refineries across the country are operating at full capacity with no dry out reported at fuel pumps despite the ongoing Middle East crisis. However, the authorities have also confirmed that 70,000 panic bookings were made in a single day. And this is amid, the supply fears, and officials have said that states have been asked to fast track the permissions for laying gas pipelines, and also all the new PNG connections must be approved within 24 hours as part of emergency energy sector measures. However, the LPG availability continues to be a concern, even though no household dryouts have been reported so far. The government has said that 94% of domestic LPG bookings are now being made online, and usage of the delivery authenticity code has risen to 76%, helping curb the diversion. So to prevent the misuse, states including Bihar, Delhi, Haryana, Rajasthan, Manipur, Gujarat, Himachal Pradesh, Karnataka and Uttarakhand have issued orders to allocate non-domestic LPG separately. And whereas the government has extended relief measures for export cargo till March 31st as disruptions at the Strait of Hormuz continue to impact India-bound and India-origin shipments. So the Central Board of Indirect Taxes and Customs has issued a fresh SOP under the Customs Act to support the exporters facing diversions, delays and maritime blockages caused by the ongoing Iran war has linked conflict. This is the linked conflict in the Gulf region, and also the revised guidelines now allow the international transshipment for less than container load, which is the LCL cargo, at all the notified ports and also airports. Now a facility that was previously limited to a few locations such as Chennai and Cochin. And because India's LPG consumption has seen a sharp fall of nearly 17.7% in the first half of March as the ongoing conflict in West Asia triggers major supply disruption. Now, preliminary industry data shows consumption declined to 1.147 million tons, which is down from 1.387 million tons, and in the same period last year, and also 26% lower than demand recorded in the first half of February. So, India imports 60% of its LPG, much of it transported through the Strait of Hormuz, which has been effectively shut, following the strikes by the US and Israel on Iran and Tehran's retaliation. Now, with supplies from Saudi Arabia and the UAE impacted, the government has restricted the LPG supply to commercial establishments like hotels and industries to safeguard the availability of domestic cooking gas. And whereas Air India has continued, operating 44 flights to and from the Middle East, even as parts of UAE airspace were temporarily shut following a drone-linked fire incident that halted the operations at Dubai International Airport. Now, the airline has said that it has been closely coordinating with the authorities and is also rerouting or rescheduling the flights wherever necessary amid the heightened regional security situation. So, the UAE's closure of certain airspace corridors has led to delays and also diversions across the carriers, with Dubai Airport briefly suspending the operations. And Air India has confirmed that while Dubai-bound operations were affected, flights to other Gulf destinations were maintained through alternative routes, and the airline has said that safety remains the top priority as the wider Middle East conflict continues to spill into the civilian airspace as well. And US TCS has announced a major AI partnership with NVIDIA, launching a new enterprise platform called TCS Rapid Outcome AI. This is designed to help companies run and scale the AI applications across the sectors, including manufacturing, telecom, banking, retail, and life sciences. So this platform reportedly integrates a predictive analytics, generative AI, and also NVIDIA's advanced accelerated computing stack to automate the decision, cut manual interventions, and also improve productivity across the operational environments. And this platform is set to enable enterprises to simulate the real-world scenarios, build AI agents, and also deploy real-time monitoring system for factory floors, warehouses, telecom networks, and also the retail store. And viewers, OpenAI is in advanced discussion to form a joint venture with major private equity firms, including TPG Brookfield Asset Management and also Bain Capital, aimed at boosting adoption of its AI software. Sources have said that the proposed JV could carry a pre-money valuation of around $10 billion, with investors committing roughly $4 billion. So while the firms have declined to comment, OpenAI's applications, chief Fidji Simo has described the plan as building a dedicated deployment arm for its technology, and this is signaling a sharper focus on the commercial scale-up as well. Whereas the US Securities and Exchange Commission is preparing a proposal that could end the mandatory quarterly earnings reportings for listed companies. So according to the Wall Street Journal, firms would be allowed to report financial results twice a year instead of every quarter, though voluntary quarterly disclosures would still be permitted, and the proposal could be unveiled as early as next month and also will go through a public consultation process. And this is backed by Donald Trump and also Security Chairman Paul Atkins, I beg your pardon. Supporters have said that the change could really curb the short term and also reduce the compliance cost. So critics are, however, they're warning that it may weaken the transparency and also increase market volatility. And because Amazon is pressing the fast forward button on deliveries in the US. So the e-commerce giant has rolled out 3-hour delivery across nearly 2,000 cities and towns, with 1-hour delivery now live in hundreds of locations. So the move is targeting the time-starved consumers looking for quicker access to daily essentials. So over 90,000 products from groceries and medicines to clothing and toys are now eligible. So Amazon has said that the service, tested on a smaller scale last year, will expand further in the coming months as it sharpens, its edge in the race for instant convenience. And viewers, amid the escalating Middle East tensions, India has secured a critical energy lifeline. The LPG tanker Nanda Devi, carrying 46,000 metric tons of fuels, have reached Gujarat early Tuesday after safely navigating the Strait of Hormuz. Now, the second such arrival in just 2 days, and on Monday, another Indian vessel, Shivalik, docked with 40,000 tons of LPG at Mundra port. Now, the voyage was enabled through coordination by the Shipping Corporation of India, and this is backed by Indian and Iranian naval assistance, as Iran sharply curtails the traffic through this vital choke point. So the successful transits offer relief for India, which is a major LPG importer, even as regional conflict drives global oil prices sharply higher. And viewers, the Delhi High Court has ordered the removal of social media posts linking Himani Puri, daughter of Union Minister Hardeep Singh Puri, to late American offender Jeffrey Epstein. Now, Justice Mini has directed that the content must be taken down within 24 hours and also restrained users from publishing or circulating such material. Now, the court has said that the platforms must step in if users fail to comply. Also noting that Himani Puri, as she has a prima facie case and could really suffer irreparable harm, and also the matter will be heard next in August. Viewers, a massive overnight rescue operation has cleared more than 1,500 of vehicles stranded near the Atal Tunnel after sudden heavy snowfall has trapped thousands of tourists in sub-zero conditions. And authorities have said that the blizzard has hit on Sunday evening, burying the Manali-Lahore stretch under, over 2 feet of snow, forcing many to remain inside their vehicles for nearly 20 hours. And teams have worked through the night to evacuate between 1,100 and 1,200 vehicles towards Manali by around 4 a.m., with the remaining cleared soon after. And an orange alert has been issued for March 19th, which forecast to heavy snowfall, lightning, and also winds up to 60 km per hour, prompting the authorities to advise tourists to avoid unnecessary travel. And here's the CBSE and CISE have scrapped the board examinations across the Middle East as the region continues to face severe security threats linked to the ongoing Iran-US-Israel conflict. So the Indian embassy has stepped in, coordinating with schools, parents, and exam centers after flight disruptions, airspace closures, and also safety alerts made it impossible to conduct the exams as scheduled. So the cancellations affect the students in Gulf nations, including UAE, Oman, Qatar, Bahrain, and Saudi Arabia. Now, authorities have said that new exam modalities and also alternative arrangements will be announced soon, while ensuring no student is academically disadvantaged. Now, with the Middle East witnessing missile and drone strikes and also major operational disruptions, now the embassy has advised the Indian families to follow all the local safety guidelines. And US tensions have spiked further in West Asia after Iran launched drone attacks targeting areas near the US embassy in Baghdad, striking a hotel and also hitting an oil field in the region. Security sources have told local media that multiple drones were intercepted, but some caused damage, intensifying fears of the conflict spilling deeper into Iraq. Now, amid the escalating confrontation, US President Donald Trump has urged the allies to send naval forces to help reopen the Strait of Hormuz, which Iran has effectively choked off during the war. But European governments have rejected any sort of military involvement, saying that this is not a NATO mission, and also warning that unilateral escalation could worsen the crisis. So Trump has insisted that help is on the way, though no coordinated intervention has yet been announced. And Israel has claimed responsibility for assassinating a commander in Iran's Basij militia, And the Israeli military has said that the officer was targeted inside Iran as part of its escalating strikes amid the ongoing regional conflict. So the Basij, which is a paramilitary arm of Iran's Revolutionary Guard, has played a central role in Iran's internal security and also recent military mobilization. Now, Iranian officials have not immediately confirmed the killing, but the report comes at a time when both the sides continue to exchange large-scale drone and also missile attacks across the region. Sri Lanka has announced a 4-day work week, declaring every Wednesday a public holiday as a contingency measure amid the potential fuel shortages linked to the Middle East conflict. So the decision takes effect from March 18 and will apply to schools, universities and the judiciary, while essential services like health, ports, water and customs are excluded. So the move follows fuel prices hikes, rationing and also long queues at the petrol stations, and authorities have said that talks are ongoing with India and Russia to ensure steady fuel supplies as disruptions in the Strait of Hormuz continue to impact the global energy flows. And Cuba has been plunged into an island-wide power crisis after suffering its third nationwide blackout in 4 months, impacting all 11 million residents. Now, aging infrastructure, fuel shortages and also US oil sanctions have pushed the grid to breaking point, forcing the hospitals to halt surgeries and also deepening the economic stress amid the turmoil. And Trump has renewed the provocative remarks about a possible takeover of Cuba, calling the country severely weakened. So Havana blames the crisis on an energy blockade and also disrupted the oil supplies, with standoff now mixing energy insecurity with rising geopolitical rhetoric. And India is condemning Pakistan's reported airstrikes on a hospital in Kabul, calling the attack deeply concerning. New Delhi is urging restraint and also stressing the need to protect the civilian infrastructure in conflict zones. So this development raises fresh tensions in the region with concerns over escalation and also the safety of the civilians. So India has said that the international humanitarian norms must be respected at all the times. And UK and Ukraine are moving closer on defense cooperation with a new pact focused on countering the rising drone threats. Now, the agreement comes amid the escalating tensions linked to the Iran conflict, where drone warfare is becoming a key risk. Now, both the sides are looking to combine Ukraine's battlefield expertise with British capabilities to strengthen the defense system. So this move, also signals deeper strategic alignment as security concerns widen beyond Europe. And multiple explosions have rocked northeastern Nigerian city of Maiduguri, killing at least 23 people and also injuring more than 100 others, according to police authorities. The attacks were carried out by suspected suicide bombers on Monday evening. The blast come just hours after an earlier assault on a military post blamed on jihadist groups. The fresh violence has shattered a period of relative calm in the city as Boko Haram and also Islamic State West Africa province step up attacks across northeastern Nigeria. And viewers, now let's look at some sports news. Real Madrid have received a major boost ahead of their Champions League showdown at the Etihad. So Kylian Mbappe is set to return from injury as Madrid aim to knock out Manchester City in the last 16-second leg. So the French star missed the first leg through a knee issue, which Real won 3-0 in Madrid. Now Mbappe's return adds firepower as Carlo side looks to finish the job away from home. And viewers, with that, it's a wrap on this edition of Market Express. But please don't go anywhere and stay tuned to NDTV Profit. This is Himakshi Bahuguna.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
first India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.